There we go. Basically, we just came back for the retest, and we're still chopping in the node that we just made here. Essentially, there's a little bit of a node. It's at the low of the gold zone. We've come back to test this 261 multiple times from the underside after having basically responded to it so many times, which is really interesting because this B point up here has never been tested and it still remains open. Now, of course, it's impossible to get to it without breaking every single one of the trend lines that we have as of now. Unless it gets there in this minute, it's possible. That's the that's not likely. But exposure to those trends breaking could effectively lead to a position that can profit at those B points above. Everything that we've managed to do outside of the gold bar has returned back to the gold bar, and I think that will remain the case ultimately. Of course, there's still plenty of time left in the day, and there's plenty of time left and space left within this area before the final trend breaks. Of course, that's just the two highs connected at the top there. So we can see we returned back again to the gold bar, gold area here. This one, yeah. Yeah, because the 188 200, it's suggestive of it getting back to uh to this spot here, and that's getting back to the old 188 200, which is kind of interesting. The B point's all the way up here for that one. And this exact same kind of grind can happen on the highs, where when we get there, it'll start grinding and insinuating that it wants to come down from the horizontal levels that it has, and then it'll slightly incline like this one declined. Find that to be very likely. So the yellow line is likely to break to get us to the VWAP in the short term, which is the white line. Juicy. Hit the gap. Wants to conquer the gap though. This pause is to allow people to sell their positions so that they don't get part of any future advancements. It also allows them to put volume in the gap. You know what that gap reminds me of? It's this one. remarkably similar. Huh. We can use it. We conquered it and we hit the view app. Any orders placed at the view app have been filled profitably. Yeah. So just to, do like a little recap. I haven't posted too much the past couple of days because everything I've posted has been like yesterday. The entire day was contained within the first post that I made. Like the entire play started out yesterday. A test of the yellow bar below is on the table for today, looking for hedges to profit off that move. Literally. The gold bar. Pretty straightforward. And then it rallied off of it. So like the idea is that you're holding and that you're hedging back to specific levels. That was a clear hedge target and it didn't make it through yesterday. And then we started today. Well, yesterday didn't end there. Yeah, we were looking at the 61, which I do believe we'll get. All of this accumulation is going to end up getting us to that 61, which is going to be this gold bar. And then we started today, and I'm like, here, interested in the 61 above, the gold zone. Any hedges should be profitable still. If you're holding, you can trim them. Stops can be threatened on the move to the yellow line above. Literally, past few weeks have been flawless. Check the chat. Not sure why it's not packed in here. And then we go up, correct, again. And it rallied. And of course, when we got to this pinnacle of reversal, this was the heaviest point of the day yesterday. And I said, I said, you can remember what I said. It was that it's going to feel it. Like, definitely going to feel it. And it felt it. And, I was telling everyone, if you want to look into getting hedges back to this high, I mean, if you're already in from yesterday, you don't have to do that because it's not even half the way back. So it's like, at the end of the day, yesterday's trade still holds into today's if you're doing it right. But if you're just scalping, it was very clear that that was going to come back to this point at the very least, and that's what it did once it hit that pinnacle of reversal. And any stops kept at the extreme have been unthreatened ever since. Yeah, this trend.
Made it to the B point, no problem.
Yep, all orders filled.
It's kind of a hidden fib. You had to seek it out and put an alert on it, so it kind of worked out.
Yep, but the thing is, it's only like halfway in the move. Like I think it's ultimately going to get back to this bar here. Like look how many times we've smashed it. I think that that's strange that we don't have a huge node on it. Kind of we do actually. Yeah.
15 up a bit here too, so
Oh yeah, that'll be changing. Yeah, interesting how it stretched so far away from it. Coming back to step on top of it with the VWAP is a really good move. I like that idea actually. You know what I like the idea of? Coming back to this medium bar, and I'll make it clear in a second. '61 looks like the B point there too. It's kind of in there, just at the beginning of that node right there. I like the idea of 161, but for the sake of clutter, I'll take those off. Now it's like as we're coming down to test the VWAP, can we also test the gold bar and test the 50 or 15? Sorry, it's so low. I mean, like, how far down would we have to go in order to be able to stretch the blue to that? I feel like it would be so much. Now, what could help it? We went sideways. Is it possible that they could get closer by off of that sideways movement? I mean, like, I like that idea of it going sideways a little bit, acknowledging the POC, and getting it a little bit, making it a little bit easier for these things to touch. Because it's healthy. It would be healthy for it to touch it, like it did here almost. Like it was under it, and then it came up and stepped on top of it, and then it went away from it. So it had a positive impact on turning it into support. I love the precision of that. The test of the medium bar. They've got it drawn the same way, I think. Like, look at how it was tested on the other sides. Look how it was tested in the middle here. You know what it reminds me of is the daily, where we made those, or it's the hourly, where we made M's, and then we came up and made W's, but it didn't really make a W very well. Does it want to make these into B points? Because that's kind of what it's doing by testing them. Ultimately, we end up with this line breaking, change things. Chasers were essentially piling in at this level. We have to deal with them. And we can deal with them by going sideways. We're undeniably getting closer as we grind sideways. The momentum is starting to get closer together, which is good.
Yeah, I find clarity going to the 5 minutes and picking out where the major fibs are, and then just putting the alerts on and then taking them from there. I really do,
Hmm.
because I'm thinking I get more points out of the deal. Because I don't know, when it starts doing the 20 point consolidation mode, just gives me time to go to a 5 minute or see where we're going, sort of thing.
Oh yeah, there's an
Because
inverse amount of time you spend on the time frames. Like you don't have
yeah,
to spend too long on the 5 minute. Once you check it,
no,
it's
no, no,
good
just
there.
quick glance. Yeah, yeah. But just to find the fibs, and because if you want to, I mean, I at least want 30, 40 points on the deal, right? At least
Hmm.
for the V points. So, and anything else just is for me, if it's just too risky. So I just don't bother with it. I just wait for the fibs to come, and then I just take my points and run.
Yep.
Bit of a conservative approach, but you know, I prefer to do that.
Yep. I also think that this sideways chop is going to lead to a squeeze. I think it's letting people short it so that they can get stopped out. I could tell at that very moment that they were interested in squeezing them. Their finger hit the trigger at that moment, literally, and this is the, the moment that they are interested in grinding this out. I think it's going to lead to a squeeze ultimately. Sometimes they lead people on with a nice jab in the opposite direction just to go for their stops. They haven't went for their stops yet. They're still rounding them up. There's going to be a lot of stops just above this node. And that's going to essentially, when they get triggered, it'll pay for the jump through the trend is what I think they're thinking. My idea with the RSI was that when we hit the VWAP, these two could be connecting, but it looks like they may connect before we even have to hit the VWAP, so very interesting usage of the gold bar too, because you could say when this trend broke, a lot of this crap came to an end. And look at how it decided to move so precisely, so clearly, so neatly on top of the area that was otherwise so controversial. Otherwise so difficult for the people that tried it first off. Why so easy now? Why is it like they're out of the way? Because the 11 o'clock slowness was the nail in the coffin for a lot of individuals? Because it was too slow for them and they didn't find opportunity for a prolonged period of time, so they got bored and left? That's human. And that's why it's necessary to do this before making any kind of major moves on behalf of the institutions, because at the end of the day, if we've got 1,000 people in here and they've all went long, that means they have sell orders. You think they have all their sell orders up here, or does it mean they're going to need to be bought out in order to get to that level? If you have 1,000 people here and they all have orders to sell along the way, that means if you're an institution and you want this target, you have to piece off part of your position at every one of these levels. You'll be lucky if you have anything left by the time you get to your target if you want to buy everyone out. Better just to eliminate them all. And what does it mean when you eliminate them all? Well, they go long here, right? They put their stops here. If you buy their stops and then get to their target without them, one, they're not going to be there to obstruct you on the way. And two, if you create a consolidation at the target, just like we did here, it'll provide enough liquidity for you to get out of your position. I mean, like, well, do you not think that's what's going on? So, yeah. And it's like when we get to an area like this up here, they can make it seem like people are missing out hardcore, so they buy it. And what that means is they're gonna have their stops in a range. So like if we can convince people to buy up here, they'll put their stops in this area, and that whole area can be the consolidation then. Well, that would be convenient because you would accumulate all of their liquidity, and they they're predictable. They've come down to being able to work it out like a science where they can expect the people to trade a certain way, and they're different people every day. It's just they understand that it's human nature to respond a certain way when they move the market in a certain way. They can expect that most people will respond on the whole a particular way. Just like when a farmer goes and deals with his animals, he expects them to act a certain way. And he understands for years that they've been the same way. And that when a new one is born, they're the same way. And interestingly enough, they just become part of the herd, and the herd always does the same thing. And I mean, like, well, I've come to realize that this is exactly what happens. Why is it the case that everyone got stopped out right there? It's interesting because they rounded everyone up. They all put their stops at the high, and sometimes they make a little bit of a jab just to make people think, "Oh, I just got stopped out. Let me get my position back." And then they stop them out again, and I'm like, "Wow, that's like a double whammy." Now they're thinking about quitting, and now they're definitely not going to be in the way. So I'm like, okay, it's brutal, but it's illegal for us to move the market. So you got to make the people move the market. Once you've accumulated a position, stopping them out is not illegal. If you round up all of the people and they're foolish enough to trade and get stopped out at the same level, and they can push the market higher after you've accumulated a position, that's not illegal. But if you push the market higher after you've accumulated the position, it's illegal. But if you absolutely rip the shirts off the back of the public, that's not illegal. That's capitalism. It's like you can it's and that's the way we have it. I think it has to be made more known, more public, because they're very incognito, the institutions, and they want to remain secret. You know how easy it would be for them to boast about their gains and their strategic methods, but they keep it secret. I wonder why. They don't want people obstructing their ability to move the market, their control. And when they have the control, it means other people don't. That's the key, is keeping that control. So constantly making change is a good way to do that, because a lot of people's strategies stick to one, you know, environment, one method. It's like, oh, the pattern better work this way or you lose money guaranteed. And it's like that's uh that's tough in an ever changing market environment. Like, did that trend break, was that for some reason the only trend break that I decided to put in the chat? Why? You know? Like this one right here, I was like instantly the only thing. A lot of space to get to the red yellow here. We're approaching the yellow line that can take us to the VWAP on the short term again. The VWAP is the white line. Any profit taking orders placed on the VWAP have been filled. Clean, clear, amazing. And then I followed through with that, with ultimately the target for those that have the patience and or persistence, because a lot of it was required to make it through that chop to get the clarity that I posted above.
Are they bringing the 15-minute up?
Oh, did it ever touch? No. Interesting.
No, not
Okay.
yet.
I mean, that one might not be so bad. Like, it's so bullish that it couldn't even get to the VWAP. I'm like, wow, interesting. It was so adamant on testing everybody out of this, because who got that viewpoint? Nobody's ever been profitable that's ever tried it. And I mean, like, it's controversial, because when has that ever happened in this trend? We've only ever seen that in reverse. And I mean, to do the thing that was most powerful in the downtrend in reverse, I mean, it's obvious now that most of the downtrend's been taken back. What are we at, the 61? So, and I'm like, this is a 61 188 again. It's like that. Well, kind of close together. The 200's right here at the purple line, the 61's at the gold line. So it all started with a short-term target, but at what point is it necessary to take the whole position off? Because the target was so clear that, I knew that by that point, you could make it safe to keep a stop at the extreme. And by the time that we've hit, first target, second target, like this was the major B point to the 188 at the bottom. But like I said, I was like, well, it's not even halfway in the whole move, right? So I'm like, usually the B point is more than halfway. I mean, usually it just is straight up. I mean, we go for B points that are more than 50% retracements usually. Like we go for big retracements. And I mean, this one, it could be an all-day update. We could be testing this as a B point by the end of the day because that yellow line could send us right back down to the gray zone when we go here, kind of thing.
Yeah, I switched to capital.com too, like you have. Got rid of the Pepperstone.
Yeah.
Too much stuttering in there.
Yep. Like I got some horizontal lines on Pepperstone, and as long as I can see where the price relates to those levels, like I can switch to another chart and still have an idea of where we are in relation to those levels. But it is strange how they do that. Like I think that when that happens, like Pepperstone should get fined like $50,000 every single time that happens. Like I would make that a law, and I would also make it a law that Oanda's shouldn't have, it's illegal. They should get fined every time their price doesn't match the index. I think personally, because it's like, what the hell? Who's it benefiting? It's clearly not benefiting any of the ordinary people. And if you have a rule that benefits anybody that put the ordinary people, I mean, I think it shouldn't be allowed. It's There's so much of an advantage given to the wealthy people in this industry. It's un unreal. But more and more uh, opportunities are becoming available for everyone else. Rewind like 10 years, and it was so much more difficult to even get involved. Because you rewind maybe 5 years, and you couldn't find a place that wouldn't charge you 12 to $1,500 for an MNQ, and $16,000 for an NQ. But of course, the CFDs and such still existed across the world, um, and were available. Oh geez, yeah, I was muted. And the 261, I was just saying. Okay, right, let me start again. So there's an average counter trend pullback. This one right here. We pulled back this much, and could we be pulling back that much right now? That's like the fourth wave right there. Well, I'm not saying actually that it is. It could do another fourth wave, but this is how much we pulled back on the second. Now, could the fourth be this much? Yes, of course it could be. Now, I can't help but notice that yeah, there's a lot of fibs going on here and everything, and it might look a little cluttered, sure, but I'm just looking at particular ones, like the relationship between the yellow ones. Straight up. That's as easy as I can put it. The yellow ones represent 61s, and the 61 is a golden ratio in Fibonacci terms. So basically, it's a highlighted level that I make gold as it is the golden ratio, and it is a good point to consider for the need to test it. And I'm like, okay, well, why is it the case that getting to our 261 would just conveniently allow for that same move back to the 61? I mean, like, we love getting back to the 61 from the other side. So, maybe we don't need all of these fibs on here. We could just put a gold dash line at the 261 and remove these ones. So now we know that the 261 is right there. And, effectively, as soon as we get to it, really hard for it not to find an interest in coming back to this level that we're currently at. And it is true that we do put some emphasis on the uptrend itself at this point. Like it's like what that's the original one right there. Brutal. Like it's come through it a couple times already. It's struggling to be in existence. Of course we're breaking it right now. This B point has been filled, but there's going to be another one in a second uh, in need of testing. Now I'll tell you one thing. Since we've broken the last yellow lines, right? The characteristics that we had while we were contained within those levels have undeniably changed, and now, we haven't been in the business of testing B points very well. Like, do you notice that at the beginning of the original trend, it left a B point untested for nearly the entire time? So, if that's the case with the previous trend, is it so strange that the trend we're in now has a W that hasn't been tested for the prolonged period of time? And even the moves that we did at the beginning are somewhat similar, like in size, a little bit smaller, but that's okay. Took roughly the same amount of time, and I just think that it's somewhat similar to what we have now. Now we've never retested the red yellow line, and could that look like a return back to the previous node? It could, but it's definitely something you don't want to obstruct from happening. However, it is dangerous to trade that movement. I'm not a big fan of, you know, seeing a trend break and then trying to trade back for the retest. It's it's typical that after the retest, we could be more interested in making a move that looks like this one. So we could find a lot more value in that move than actually trying to catch it back to the retest. Now we can see that the last trend that it broke when it was in this uptrend, right? It did not retest very well at all. Maybe that is a characteristic of this trend, because since we were so finished with this way, it's been apparent that things have changed and things are new now. And not a single trend is intact from the old area. So we've managed to break the red yellow line, the yellow lines, and all of those downtrends have come to an end. Now, of course, we're at the 127 fib channel level, and we're looking at progressing through these ranges, which could take some time. Now, why is there a blue zone here? Well, because there used to be a node there, and overnight we use this area very, very predominantly to continue to develop that node. But it all started just over here, and that's where that node began and how it looks. We can see the importance of it later. Was unable to break through it, and here we are again, turning it into support, I think, contrary to popular belief.
So the 261 to that B point down below.
Oh yeah,
Yeah.
yeah. I just marked that one as a gold dash line. I think I can make it like that. Past that 261, the volume really changes too on the volume profile. We can see that there's like barely any volume beyond that area up there, which that could work as a barrier. But then it raises the question of on the last B point that we made, it made it all the way down to the 361. So does this one. That's another. It's like, wow, if it ended up going to the 361 and costing somebody, it's like, well, why wouldn't that become a consideration? Because at the end of the day, what's the market done then? Well, it's convinced everyone to trade roughly in the upper middle range of what it's done already, which could ultimately look like lower than the middle by the end of the day. And I'm like, well, that's it's not good enough for me. And I look at what it's done to the people of this range ever since it started. Like, it was good at the beginning. Like, the people of this node were offered a lot, but anybody that ever tried to find any kind of value in it again has been brutal. Not gonna lie. So that's closer to being finished too. So to assume that it's going to continue to be brutal for these people is naive, I think. We want to make sure that we're aware that things are closer to change, and we don't need to see it change before we understand that it's going to change. We have to understand that this environment is closer to the end, than the beginning. That's the way that I see it. I suppose that's my opinion, but you know, I basically the target's above, and the only way to get there is to maintain the existing position safely and ensure you've taken off enough profit to make sure that it's safe to continue holding. Well, all I can say by this point. And what if it does the same thing that it did when it got here before? I mean, what is the likelihood that we create some sort of node here and chop here for a minute, only to just step on top of it ultimately, I think. But anybody that tried to get this out of it again has been treated very badly, and I think that ultimately it's closer to giving that again. Contrary to popular belief, everybody's sore about it, and I'm like, well, excited about it. That's the interesting part. And not so much though, because the overnight session, it's not the Americans really that will have been sore about it. It's the people that trade overnight, like which the rest of the world. Because believe me, they definitely look at the American markets, as a lot of the other indexes can mimic the American markets a lot of the times, but not all the time. The big moves, though, definitely similarities. And even overnight, when you see some big moves in other indexes, you can see the Nasdaq playing along, sorry, as well. Sometimes not with China anymore, though. It's definitely doing its own thing, moving so much better than the Nasdaq. Oh my goodness, those moves. Not even open for them right now. It's moving better. Ridiculous. Like, look at that run right there, and the retracement that it had. Absolutely amazing. All the B points crushed. Huge. Doesn't stop. This is Hong Kong, though. It's not China. China looks like this. It's like a better version of the SPY when it's open. This is when it's closed. Like the SPY now, when it's open, it's moving like this. Like pretty heavy duty. Like it just opened here. Lunchtime. You can see they have a lunchtime. It's kind of strange, but they have their moments, that's for sure. Definitely heavy volatility. And then you got like UK 100. Like in comparison to like Japan and stuff, like China is way more flexible. Like I like the way that the footsie moves, except it's it can die out like the SPY. Very very difficult to get ranges that are very wide. It tends to be very tight. And when it's not open, like this is toxic right here. Very very like who's making money on that? It's very tough when it goes sideways. So another perspective. Level means business though, and getting on top of it and making it into a support is huge. I really like that idea. I mean, under no circumstances is it ever safe to drag your stop into this red zone because it's like it's just a level that loves to get tested. You know what I would say is after it has been tested and we've moved beyond this range and are now contained within another range that has another green zone, then it's safe. But until then, no. That's what I say about that one. And because it's like very, 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 very adamant on making sure that it's going to be difficult for anybody that's late. And I mean, if it's going to do that and you drag your stop up into that area where people are late, don't be surprised if you're part of the chaser retracer, because you just dragged your stop up like everybody else, right? And I call that the chaser retracer because it stands out as like a really like a it's an event that you don't want to be caught on the wrong side of, I guess you could say, because it's where the chasers get retraced and or the chaser or racer, whatever you want to call it. But you'll remember it. That's the lovely thing about it. And it's self-explanatory. Like the chasers are directly targeted because of their late uh, factor. Anyways, we've got a new trend. This one here, we can readjust. Is it not interesting that we came back to the original triangle of the day? The one that we were originally looking at, like the very, very early one that was like, hey, we just came back just to that triangle. Now it's like, well, what have we done? Are we for the first time ever on top of the triangle? And we've essentially come to the point where everything beyond this level here has been wicks and spikes. It's very much a level that has inflicted change beyond this level every single time. Everything that we've ever done past that level has returned as quickly as it's left. Now, what's interesting about that, really interesting, is when I look at the barriers themselves, I can see that this one, it's the spike on the high. Quite remarkably reminds me of what we did on the low, give or take some wicks and spikes. Not always is it as clean on the short term as it can be in the long term. But these two moves are undeniably very similar, and they're both associated with the extremes of the range. And of course, this spike on the top and a spike on the bottom led into it breaking the downtrend. Now, what what could it mean to do something more than a spike? What is more than a spike? Well, a spike first has to be defined. What is a spike? A spike is just a move that comes back as swiftly as it left it. A move that retraces the entirety of its existence by the time it's finished with it. So, and the more that you look like let's say for instance the closer that you look, the more it'll look like this. The farther out you are, like the longer term time frames, the more it'll just look like this. Like a candle has been fully retraced throughout that entire time. Kind of like this, a wick. But if we were to zoom in, that movement right there is very much like our spike. So that's why I say a wicks and spikes zone. Because it depends on what time frame you're really looking at it from. It could look like a lot of spikes or maybe just some wicks. It all depends. At the end of the day, these areas are the extreme areas of the range that have been outlined. They share similarities in the fact that they came back to the same baseline roughly at the same time in speed and velocity, and the space that they took was also the same. And I'm like, well, why so particular? Why so associated with the extremes and outside of the node and everything like that? I'm like, well, that's interesting. So it means that area that's otherwise identified as an extreme cause the market to make this kind of or to react like this, should I say? Like it's a reaction to being outside of the range. Like I was gonna say like a fish jumping out of water, but it might not be such a good example because it happens on the bottom too. But it is something that we're gonna see change. Because I'm like, what if we get up to this point on a trend and it breaks it and doesn't return back? What if it manages to go out of the range and go sideways and then go up without coming back to the red zone? What if it manages to come back to the red zone and then go above our spike and then continue above that without coming to the red zone again? Would that mean that we've managed to turn the red zone into a support and then continue to turn like something else into a support above it? Like what if we turned this spike above the red zone into a support? Would that mean that we've done something that we've never been able to do while we were in this range so far? And could it mean that because we're denying the confines of the range so well, we're interested in leaving it potentially? Well, because it's clearly not working, right? So I'm like, well, as of right now, it is working because we're in the red zone, but for how long becomes a question. And is it just allowing people to develop their short trades so that it can do the same thing? Because undeniably, it did it to them before. Who's to say it won't do it to them again? Because the people that started this environment seem to be pretty serious. They're clearly long, and they decided for it to happen at a very particular time. So, are we going to be in their way? It's not. No, well, hold on. At the beginning of the day, how did it progress? Well, we saw like even from the very, very, very beginning that it was capable of making a consolidation. And what did it do? Well, doesn't matter that the institutions found value in it. The whole thing came back to where it was consolidating, and then again. And then, we could see that kind of similar kind of movement style as we carried on. Any kind of big push up that it made had major retracement. So anybody that was late to the party, like literally these people that found excitement in it, they better have sold for a profit or it came back, right? So that's tough for them, right? And then I'm like, well, we could see it continue into the day where it's like, well, big consolidation. Then it comes all the way back to anybody that didn't catch this little bit. Well, that's not very nice, right? So at the end of the day, it continued to do that again, and it made everyone all the way back to the area. It's like, oh, you didn't find value, and when it was choppy and slow and down at the bottom, and it had to be running up for you to find value in it. And the market's like, no, 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 can't be doing that. So I see that, and I'm like, well, it's interesting that we've got a consolidation, and it hasn't found any interest whatsoever in returning back, but rather anybody that's expected it to do that is getting burned like crazy. So it's interesting why the change. Because we've never been able to move like from this far into the green zone with no obstruction all the way up. And isn't it interesting that it came out of a difficult environment for anyone that wanted part in this move? Like it's like if you were expecting that trend or that trend or that trend to give you the red zone, well, you had to go through this first undeniably, right? And you had to wait for patience until like that moment that I posted in the chat where I was like, well, obviously, you'd be very interested in this trend. And it's like, well, why not the past 11 trends? How many lows did it make there? Does anybody know? Like, in the next 3 seconds, it's not countable. I mean, unless you're a robot. I don't even know. I don't care actually, but it made a lot, and that's the main point. So I'm like, well, it could certainly feel like 11 lows, and usually it's not actually 11 lows, but it certainly feels like it. That's the point. Because it's exaggerated. That's why it's 11. Anyways, it could be called a multi low zone, and I realized that after I named it the 11 low zone because it was like a drag. It was like expect 11, and when it gives you 7, it's easier. That's what I've come to realize. If you expect it to make 30 lows, I mean, you're going to be fighting like it's nothing. It's be like, oh yeah, I got like 17 more lows we got to fight for here. We know it's going to be tough for you. So 3 and 2 out, 3 and 2 out, 3 and 2 out the whole way. And it's like, don't be surprised if it doesn't come back one of the times. And you've got your exposure then. Whereas everybody else doesn't because they've been just stopped out too many times and they've given up. And of course, is it not true that if you're holding from any other day prior to today, you do not have to play this game? Instead, you could focus on hedging and taking profit. Does it matter that you took profit here? Not really. Like spikes and wicks past that point, you've made enough to afford the wait and not to have to take a risk in this dangerous environment. Not that really it's dangerous for most people, so it's like at the end of the day, if you don't see it very, very clearly when it's supposed to reverse, it's dangerous, and yeah, basically that's it. Now I want to comment on the absolute atrocity here that we've seen with this trend break. Like, what kind of trend break is this? Is this Amazon or something? Because like we don't typically break trends like that. Like, think about how this one broke in the morning. I found it remarkably similar actually. Like, like they started it the same way. They even came back to retest that line. I'm like, what, did we see this line before? I mean, has it been subconsciously trying to imprint itself to show us that it goes down and now everybody else is ready for it and it does this? I mean, like, why such a change? Because undeniably it's using this 64-degree angle many other times and many other significant trends. Now it's presented again and it doesn't work in the red zone on a bigger move than any other move. That's interesting. So, you know, I look at that and I'm like, wow, it's a fact that it did treat everybody like that. So do I have to watch out for things like that in the future now? It becomes a really, really interesting thought, in my opinion. I'm like, well, you analyze the danger. It's not a good thing for a lot of people. A lot of people try to avoid the idea of even thinking about it. But if you just keep yourself neutral, sometimes laying out the facts and seeing the reality can seem negative, but it is so necessary to keep you out of danger. And if you look at it with like a mature kind of mindset, not an emotional one or anything, just like a mathematical one is a really good way to look at it. Like a serious mathematical one. Like you're you know like I was gonna say deciphering the launch codes or something. Like, it's really important, like you have to do it, and it has to be right, and it's very important, everybody's counting on it. And that's that's the way you have to think about it, in my opinion, to keep it. And it might sound funny because it seems ridiculous, but it's what it takes to make sure that you follow the rules and ensure that you're safe the whole time. It's unbelievable what the squeeze has come into now, though, because it's like, what, so many people find value in buying at the top now. No, 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 no. It's people that have shorted that are getting railed. They're exiting their positions by buying because they shorted expecting it to go down, and they're getting railed out of the red zone now. So it's like, what makes me think? It's like the market, if it could say something, it would be like, you know whose team you're on. It's like clear. It's not the losing team. And watch out for the yellow line to get tested. This yellow line, I love it when it does this because it means that people are fueling the progression of a position that's otherwise been accumulated because it's, the value that was found in this area where it was tough for most people. I find that the larger institutions have been buying the entire time. Buying here, buying when the whole range started, and here as well, and here as well, because they effectively understand that there's value in the future. They can get a lot of people to short while it's high and use that to push it higher. And I think that's what's just happened here in this squeeze. But like I said, with this blue and yellow line, it will be seen again. Any stops that are ever dragged in its path of being tested, like, I don't care if it goes up to here. If your stop loss is like right here and you're like, oh yeah, I'm going to drag it up here, it'll get smoked out, guaranteed, 100%. So we have to be careful with that. At least, yeah, it is my opinion, but I mean, I, I, I just made it clear, I guess, as far as it needs to go. Also, any stops above the red zone, because inevitably, we will make it through the yellow and blue line. Like, we will make it through it. It's just, it might be very tough on them first. But things can act like while we're on top of it, people are undeniably in a very tough position. And the sharper and quicker we move down to that blue and yellow line, the more people might short it. Like, the people that have been stopped out here might just be angry. They might short it again. And that could mean that they might put their stops even higher. We can hit them all again if we can convince people to actually short it up here. That's the interesting part. Making it go sideways will hurt momentum. But are we in the business of doing this anymore becomes the question. What did it change to? Undeniably, did it not change to this? Is that interesting or what? Because literally, we did this. We went from consolidations, we popped out of them and retraced all the way back. And now, when we do our consolidation, where's the retracement? I mean, we did it here and we did it here. But this was supposed to be what wave? Right? So it's not the not the fifth wave. So undeniably, the on the other chart, what was it? US 100, the 261. I had like a little white box I was drawing from the 261 back down to the zone there, back down to the zone. So we're back up at that same POC level from yesterday. Absolutely amazing. Actually, you know what? I color this blue and yellow here. Oh geez, they don't make it easy for me. Now this is the 188 200 fib channel level. Undeniably, it is a level that could provide some sort of resistance. Not to mention that it's in conjunction with the POC from yesterday, and I marked that POC because it was a big deal, and I liked it. It was so even around it that I was like, well, what are the odds we take everything we've done today on the bottom, put it on top of this area? Because I mean, it was in the business of doing that yesterday, and it did it with the biggest of moves yesterday, and it was good at it. Straight up, it was good at it. It debatably got better at it throughout the rest of the day. Like, look at how it made this move here, and then look at how it made this move. Like, what is up with that? Complete control, eh? Like, no obstruction by all the people that show up in the morning, where it's just raw, and they get treated a different way. Look at them get full retracements like that, full retracements like that, and then at the end of the day, you know, it wasn't moving in the upwards direction, but it was going down, then sideways, and then down, then sideways. So we can see that. Very strange, though, ultimately. Not normal for it to move like that, like the aftermath, like whatever was going on there. Oh yeah, that was a close right there. Okay. So the blue zone, I just have to remind everyone because it's different. It used to be a node, like it used to be a heavy duty node, and we stepped on it. And I'm like, well, you want to know what I'm thinking? Is the fifth wave comes back to the fourth, but that's it. That could be interesting. What if we use that method again? Because when was the last time we used that method? What did we use it for? Well, we would go 1, 2, 3, 4, 5, and then repeat the process, and then repeat the process, so on and so forth. You know, that's the idea. hmm And I don't expect that many of the public will remember that, even though it was like so recent. But I think it can be used again because it worked really well, and it worked when it was unobstructed by the public. So there's a good chance that when the public is out of the way, they actually don't get to learn from the rest of the day typically. So that's why we can see those end of day things happen so frequently, because when they're done, they're done. And it seems to be repeatable for this point until they start to notice, which is, it's hard to even communicate that with them. How do you communicate with the entirety of the public that they should be interested in something? It's difficult. The lack of communication is incredible. Okay, here's one for you. By the time that VWAP hits the 50% retracement, which is the B point, okay, so when we take this white line and then we hit this green line, I think it'll be ready to come down to the B point. We have to watch out for that. When it tries to come down to the B point, it might not make it all the way. It might just make it to this, which would be the fourth wave, which might effectively start the process again. Very rudimentary analysis for sure. But is it not true that it would get us to the gold bar? It's ironic, but it is true. At the end of the day, if we merely pull back to the fourth wave, let me draw a fib extension on there real quick. Because if we pulled back to the fourth wave, doing 100% of this move again would get us to here. Now, if we pulled back to the low, 100% would be here. Huh. A good hedge target, you could say. It's reason for it not to get all the way to the B point. And I mean, why are we even looking for that? Well, how many times does it not need to get to the B point before we start to look for reasons why it's not getting to the B point? I'm like, well, this could be one of them, right? I mean, like, that's true. Good point, though. And I'm like, well, it still deserves being marked and everything, but it's not. It's certainly not your average situation. I find when we make the VWAP meet this level though, things can change. And that means that like as we coast along here, the average price will slowly increase. And at the moment that it starts to get into that gap and starts to actually, get close to that area, I've noticed that puts a lot of stress on the trend, which I mean it is breaking right now undeniably, but I don't know if it will break very well. The fourth wave is definitely a consideration. Like I said,
I don't have it coming off 188 200
to that
for
one,
that
a
B
bigger one.
point. Yeah, yeah, yeah. No, that one. Yeah, the green line there,
Oh really?
green
Yeah.
dash line. Yeah.
Go ahead and readjust all of those fibs. Ooh, interesting. Let me just put this one up here for a second. I just want to look. Oh man, that puts the 261 really close to the level I want. Not to say, okay, and then there's this B point. What is it? Oh, okay. So there's like under no circumstances have we ever really tested that B point. Like unless you consider this little move here, which I'm like, no. That distance right there that we missed that B point, it's true that we missed a B point by that distance. Is it true that we could miss this one by that distance and then get that one? That would be interesting to me. If we missed this B point by that much, you know what? It would be the bottom of the zone, and that's exactly where I placed my fib uh, channels to get the 100 inside of my gold bar. Or is it a coincidence? Or is it somebody lining it up like that? Yeah, it's very likely to get there. I don't care what it has to do in the meantime. If it wants to come down to the B point, that's fine. If it wants to miss it, that's fine. Anybody that's long shouldn't be threatened. At the end of the day, if you've hedged it, you're still in the same situation that you were in at the beginning of the day. If you caught the highest point of the day, it managed to come back just below that level. If you're in from yesterday's hedge still, then you haven't had to do anything on either one of these highs or any of the lows because you're exposed to each one of them. If it wants to come down to your core, well, you're lucky to have a hedge from the high. You'll still have a position from the extreme. If it wants to continue going up, well, you will still have your position from the lows. And your hedge will be stopped out with a profit because you should be able to take off enough profit on a day like today to secure your ability to hold whatever you have left. But Like, yeah. That's a blue line though, eh? We'll see. We'll see what's up with it. We're running into a node right now. I can't help but notice that on where I circled, the high of the circle is the beginning of a gap. Sorry. So I do like that as well. You know, it adds to the confluence at the low of that level. And like I said, the idea is we've taken this distance from here. It was the distance it could not make it to that B point. Would it be ironic if it decided to not get this B point, but instead get this one? By leaving that much particularly on this B point too, it would be very particular, wouldn't it? It could almost be like no active random nature at all to be so precise to lead to a target that was already presented. I find it hard to believe that it's an act of nature, but the intention of the people that understand technical analysis. And they look at it like it should it has to be moving in at a technical pattern at any given time. That's why how they keep control, you know, and they keep understanding. And these technical methods clearly have an impact on the way that the average person trades. Like all of the people that don't consider charts, all of the people that just consider news or fundamentals and such. But the news and fundamentals is all considering information that has been, what is the word? Formulated, it's been created by a human being that could otherwise be incorrect, and that could otherwise give false information. They could otherwise give information that benefits themselves and harms everyone else. But things like the candlesticks, the volume, the price, the time that it's taken to make ranges, the technical analysis, it can't go back and change the candlesticks that it's given. It's undeniable that if they move in a certain way, they can move with an inclination. Just like when I talk about how we construct a sentence out of smaller words, we all understand those smaller words have connected in a certain way mean they convey a bigger message. As like the W that we see here can have a 5-wave move on a D leg, and all of it can fail. And I'm like, well, that's the interesting part about it. You know what's interesting too is the fact that this B point right here that I've moved over, right? We've come up to a 61, a 161. And with precision, that was in line with our POC from yesterday. The level that otherwise is probably the most controversial resistance barrier that we've had. And I think by coming back to the fourth wave, 1, 2, 3, 4, 5, and chopping, making maybe even a range, um, it's going to get above it. And hopefully it doesn't take that long. But if it does, it's not like it's going to be moving any differently for anybody else. So they're going to have to anticipate the same moves as well in order to make the money that the market's willing to give throughout the time that it spends open. Like I understand that. Well, that green bar above, it is itching to get tested again. Ironically, it's coming to us, so at every moment that goes on, it gets easier to get to, um, given that we're not moving away from it. But even if we are moving away from it, we have to be moving away faster than it's coming down to actually get away from it. Because any movement that we do that's sideways brings us to it. So if we move up, obviously we move back to it twice the rate, that we would moving sideways. Now, at this point, it becomes something that we have to understand. Unless we're going to end the day underneath it, just look at what that would look like for a second here. What would that look like if we ended the day underneath that line? having not broken it. You want to know the commitment that we would have to put down from this point on to be able to maintain that trend? It's not impossible, but the closer we get to it, the more unlikely it becomes to be able to have the time necessary to be able to pull that off. So I'm like, well, that's the it's like like a science, when we run out of the space, I look at it like like a stream that's got like rocky edges. It's going to have to work its way around the rocks on the edges in order to be able to flow properly. And at the end of the day, it's like there's much obstructions in the river, and in those when it runs into an obstruction, it has to either stop moving at it, or it has to respond negatively to it so that it can get around it essentially. And it's very much like that, because if it doesn't stop at it, or it doesn't respond negatively to it, it's hardly a barrier at all. That's my point. That's the idea. um and I'm like, well, hold on, what's this? Are we doing that? Maybe not, but very close, very close, very close. Our average consolidation size, I wonder, some similarity. There might be more similarities with a different consolidation, but it's like it's trying to do this. There's like a very slight difference to the amount of like triangle we're working with there. And I mean, one thing that I like about doing that is I'm like, well, this triangle, it doubled basically before it ended. It took that entire space and an area that it had, and produced it again before it ended. I'm just check this. It's almost like it came from that distance too. Interesting. Anyways, the triangle, it does have the confines that we can say, hey, if we draw in the lines, inevitably it is triangulating until it breaks the barriers. So what do the barriers look like? I despise the downtrend. I'm like, that downtrend, it's just like it's like ugly in a weird way. I don't like it. It'd be better if it was like that. But shall see. You know, honestly, it'd be better if it was like this. I'd have a lot more respect for it. And I think they're going to go for something like that. Like, is it not true that we came from an M? Could we do a W? I'm like, that's on the table. And it's a bad position to go long, though. I'm just putting it out there. After all, this gold dashed line used to be a 261. Everything we've ever done past it has come back to it. Obstructing that from happening is dangerous. So it's like, well, that could change at the end of the triangle, because undeniably 2 minutes from now it will have to decide which one of these trend lines breaks. No? It's a fact, right? So we know that we're waiting here for something. We're not waiting here for it to do more of this. Now, it's possible that it does not even feel the triangle, but it's not likely to do that. It's likely to feel the end of that coiled up energy. It's built up energy. It wants to be released on the break of one of the trends. Typically, the first trend to break isn't the last as well. With the triangles, remember what we did earlier? It was kind of like a spike out of both sides before it went in the original direction that it spiked out of. It's a fact that it did that before. It's a fact that since that time, there has been no triangle that is similar to the one that we did then. So I'm like, well, is it so bad to consider it? I mean, I think it's naive not to consider it. You know what I mean? I'm like, literally, I just, it was the last thing that we did that was similar to the thing that we're doing now. Of course, it might shine a light on the thing that it might do after. Like I said before, when we were done this, we moved the distance away. Could coiling up by this amount mean that we're capable of moving that distance away when we're done with this confinement area? Does it mean that this confinement area is capable of moving this much? Because look at how much it moved when it went into it, and look at how much it moved when it went out of it. Or is there no similarity there? I'm like, I see a lot going on there. Like it continued past the consolidation as much as it did at the beginning. And I mean, you could say that it's just an S wave. You could say that it spiked on the top and that it spiked on the bottom and that it had a consolidation in the middle. I think very similar to what we see a lot of. And I mean, like, do we do that here? Is it true that if we did this spike out of the bottom, we would get to the bottom of my purple? Or what is that? Blue. I'm like, yeah, it would be. And isn't that what we were looking at? So it's possible that we get the bottom of the navy blue area. It's not something that I think you should really go for. It's just something that I think that is not safe to drag stops above. If you do have a hedge, placing orders on levels like that are not a bad idea because it's not like it spends a lot of time at them. Of course, it made more of a lunge out of the bottom side of the triangle, but that doesn't mean too much. What it means is that there's no more risk of this trend breaking, that it's already broken. Yes, it can retest, but undeniably, until we break this trend, it is the trend. And it doesn't look like it's going to be hard to break it. Like it's how do we acknowledge the blue zone for very long without breaking that? I mean, is it more powerful than the blue zone? I don't think so. I think the green zone wants to get seen, and if it's off of the blue zone, that would not surprise me. But the bottom of the blue zone would be the ideal level. And even, making the head and shoulders that gives us an inverse head and shoulders and then blows out through the top in the same way that it did here. Could that be on the table? What would that lead us to? The B point? 200. That's an idea. I cannot help but notice that phase A has shown itself here as well. Phase A is very accurate, and phase B is brutal and bad, or can be bad, which is like it's bad as in like it's a dud. But hey, this is what it's like. So when we do phase A, we'll just look at phase A. Um, we managed to pull this off. We do this like PSY, which is here. It's like a consolidation that sets the tone for the support of the entire area, and it does that, right? And then so when we leave that area, we leave and come back to it, right? We all understand that that's a move that we did here, and then we try to come back, but we don't come as high. It's like a secondary test, and it's terrible at it. But then when we come down, we go down below, like put this PSY to the test. We really put it to the test, and this is how when we're doing this, we really start to construct the support lines that are then related to the resistance lines and its capability of being able to get through the top here. And I mean, start like, okay, you want to know what's funny? Because I think it's going to get to this point right here and not go down. So if it manages to get to phase C properly, it doesn't come down from it, is what I'm trying to say. Phase A is usually where the accuracy starts to end. And I mean, well, it's like, what do you mean phase A? Phase A is where it all begins. There's all the way to phase E. And we do phase A the most and forget phase B the most. And nowadays, you'd be lucky if you saw it work properly. Like if you saw it work absolutely properly, you should be worried. Probably not going to work at the end of it. That's the interesting part. When it's all butchered up and barely hard to see, and you're like, squinting your eyes to try and match it up, it's probably going to work because a lot of people don't notice it. Contrary to popular belief, the more clear the pattern is, the more people will be associated with it, and the more profit taking they will do as soon as it starts to leave the pattern, which prevents it from moving. Because if it doesn't move instantly for them, then they start to feel bad, and you can count on them to cut it sooner. And as soon as they're presented with profit that they haven't seen before, they're likely to cut it too, which means that to the institutions, it obstructs it from getting to major profit targets. That's why if it takes all day, and if it's slow, and if it's hard on them, they leave, and then we get this. So it's quite intriguing. All part of the plan, though. And days that are very, very clear typically come out of uh, environments that are very slow and offer minimal targets, minimal patterns, minimal movement, tight ranges, and people think that that will last forever. It's common. We're almost at the low of the navy blue area. Hmm, what could it do there? Well, I hid the volume profile for some reason. We can see that that is a gap. Now, you want to know what's strange? The VWAP didn't quite make it all the way up to the B point, but it's close. And a little bit of a chop on the bottom of the range could bring it to us. I mean, it's just very slow. You can see it's barely moving. And how many minutes would it take at this level before the white line meets that green dash line? Because that's how much time it might take to get away from here. And I mean, like, well, hold on. How many minutes would it take to get to the yellow line? Could that be the same amount of time? Sure, it might be. At the end of the day, the yellow line, it's one of the most undeniable considerations of the moment. Like, out of all of the other things that we're looking at here, the yellow line is one of the things that is going to be the hardest not to deal with. Like I say, it's very demanding that we get associated with it. By the end of the day, we will have had to drop all the way to here to stay under it. Now it's starting to get a little unrealistic with that, eh? So beware of that. So unless it's going to do that extraordinary steepness for a prolonged period of time, it's very likely that we're going to have to deal with that trend's break. And the first step in dealing with that break is getting to it. And if there's 10, 20 minutes or 10 minutes until the trend and an appropriate place to spend 10 minutes, VWAP, or this area, this node, or well, it's not a node, sorry, it's a gap. Fill the gap in maybe, or try to. It's terrible at filling gaps in, but sometimes it fills in half of it. We might see that here actually. You know what? Why not actually? We could fill half that gap in, make it look all different, and then leave it. By tomorrow, people will wonder if there's even a gap even there. They won't even know there's a gap there if they fill part of it in. They've been doing that lately. Like this one here. I mean, what on earth, how would you ever know there's a gap there now? Like there's still, I mean, it kind of was made clear there for a second when we looked at it, but they shifted it something there. It's definitely not, definitely doesn't look like it's accurately placed in that area, but you can see the market's totally responding to it with absolute precision. So obviously I'm not going to change it, but if anybody was going for the other gap, that they're still waiting. And how common has the 50 been lately? So I question the 50 here. Currently at a 41% retracement. Wow. Isn't it interesting? Like, why on earth would it get all the way down there to not get to the B point? Like, who's it good for? Like, isn't that interesting that I tell you who it's bad for is people that program robots to take profit at the B point. They just don't get filled. I mean, somebody thought that they could go to the park while their robot trades for them, and they put it at the B point and it's not filled. I mean, it doesn't mean it's not going to get filled, but I mean, a lot of them haven't. Like this guy up here. We've never seen it. And I mean, how did it treat the robots of that day? It didn't treat them very well. I mean, came back to their entry. And is it not true that this B point is as predominant as that one was? Like it took this triangle to make it like roughly an hour of consolidation that didn't get tested. And I'm like, well, we got more than an hour here, no? These are gonna have some of the tips. But these lines they're not necessarily important. You can turn them down. See, that's that's an interesting move to me. Because what did it offer anybody past the blue bar? Wicks and spikes. So eager to get back in. I mean, like, okay, hold on. Let's look at that distance. Where do we get this distance? Was that not the distance that we made past that high, roughly? Pretty much the distance that we made on the bottom spike there, too. Pretty much the distance that we make most of the spikes. That was, but still, why so common? Spikes, spikes. I'm like, well, how many? I don't need to circle anymore. There's clearly more than a dozen. So, is that the average size of the spike? And what do we do every time we've made it in the past? Well, it's been threatening to the trend. May not have broken it every time, but it at least got to it. And that's whatever trend it's on gets attacked. And enough of that, it'll get, it's like it wears it down, it can only can take so much. Especially when we're in a day that's not fueled by an event like or just like an all day directional day. It's more of like a range day, if anything. It's been very interested in this area here. Like this is the ideal support of the day, sure, but this area right here, I mean, it has been the mean. And like think about what we're doing to it now. Like when have we done what we're doing to it now ever before? Like has it ever been a thing? Like what are we doing to it now? Like is it a fact that when we first originated, it was hitting it from below, chopping below, and it just couldn't make it through it, couldn't make it through it. And then it started just a little bit, just like the axe is just getting through the door kind of thing. And it's like a little bit more. And then now, it's like you really can see we're starting to break down the barrier. We're starting to turn it in. We're starting to put more past it every time we throw something at it. We're starting to throw more at it every time we throw something at it. Starting to be worth more to be involved with it, ironically. Well, it's a fact. It's a dangerous fact, sure, because one that's already involved could be made safe, but people that find it, you know, attractive to trade in the middle, I mean, I think that these middle people here will get treated very similarly to how on the bigger picture process we've come back down to this green or to this gold bar, and it's not even close to the middle, and it treated the people really really badly that wanted anything to do with the continuation. And anybody that was late to the trend, like if anybody bought past the break of the red yellow line, that was unacceptable to the market because it overlapped them all. So I can see that. Now it's like unless you caught the wicks and spikes on the last trend, everybody that found excitement in the big blasty bit is now retraced, but safe if you caught the wicks and spikes. Why so particular? Why does it care about these people? And look at how many of them there are. Nobody? Interesting. Why does it protect nobody? And it makes me think that when it's at the low too, why does it come all the way down to where nobody's in? Why does it overlap everybody when it comes back to do this, it comes back to the point where nobody's in anymore. And it's like who's it protecting? Do we believe that at the very pinnacle of the low that there's no buyers at all? Like look, that's just pure selling? Or do we understand that this is a display of retail volume and that those shares that people are selling are going on to dark pools that actually fuel the market? Because like preferred shares, um, they matter more in the exchanges that they trade, I'm sure. Should be made illegal in my opinion, just not enough people know about it. But I don't think a single individual would vote for dark pools to be legal. It just benefits people that don't have any interest in anything but themselves. That's the interesting part about it. But that volume that's at the extreme right there, we can see it's displaying the entire retail trading spectrum. And basically, it insinuates that everybody likes to trade in the area that is not the best price that offers the most points. Because the best price that offers the most points typically is the extreme, right? Well, because there's no better price than the extreme. So at the end of the day, um, you would think that more volume would be had, more value would be found in places like extremes. But we can see that the market is really willing to reverse at a point where nobody's interested in it anymore. That's another point where it's like, hey, it's been made difficult for them. And this area right here is the area that's the safest to be in. Because where do you think it's going to pull back to when it does pull back? The area where most of the people were in from, or are in from, which is POC, VWAP. That's where we are right now. The 61 also consideration in this environment. And it's also 1, 2, 3, 4, and 5. We basically just passed the 50, and we've effectively reversed all of the B points now. We can change them back to the original state. Where in this trend, the ability to hit the B points is atrocious, and every single one of them is likely to get hit by the end of the day. And there is a B point still left untested down here. I'm gonna mark it. I'm gonna turn that color. I don't want it to be a thing that draws attention. Beautiful movement though, and literally instantly. What I put in the chat. New B points to consider upwards. Crush that one too. Hmm. I'm gonna put never end. Just the relationship with them does. This pause is so that people can piece off their position so much that they got nothing to sell at the targets. That's what this is for, in my experience. They add volume to the node. I mean, that's the name of the game right here. What did we do? We managed to take this spike out of that consolidation. We put it out the bottom and then did this much. Counter trend move? Perhaps. I mean, it was originally a counter trend move. That was used in here a lot. I don't think this wants to be a blue and yellow line. That would honestly suck if it did. The idea that this line is more attractive, I'm like, yeah, it's like one of those 11 low zone lines where it's like, yeah, could it break to here and then to here and then to here and then to here and then finally gets to the green zone, then it breaks. Because anything that it does beneath that green zone, I don't really care till it breaks it. Everything's about breaking that green zone. And what's the green zone about? It's about getting to the red zone. And we can't do that without turning this into support. I guess if it took all the way till here. Why on earth is it red? Why is it on the close? Turn it to okay. This inverse head and shoulders like movement. It's like we did this. This is terrible, actually. I do not like this, but it will end. Like when it does this, it's a series of like 9 moves, or because it's more than this. You know what's funny is this used to happen after this. And you know what I don't like about it is that nothing else can happen until it's done, and it's not very good movement. That's my point. So it's like, okay, well, when it's doing it, God forbid you obstruct it from doing this while it's doing it, because it's pretty fixated on making the series of moves, and I mean, like, well, it's by the end of it, it's very easy to make a triangle. I know it's not, if this high was a little bit higher, it already would be. Then I'm like, well, what if we make a flat top? Could we make a flat top on that? Well, all we got to do is hit it one more time. Interesting, actually. Think about that. I don't like the idea of making that a flat top. How do we not make it a flat top? That's another question I'm interested in. Oh, dude, yeah, totally. This triangle doubled down again. Interesting. Did that before. Basically, wicks and spikes left it. Was the inclination of that amount of consolidation was to produce that amount of movement. A lot of people will be fixated on the triangle now too, and I'm like, well, triangle, what is it associated with? The change of the hour? Where have we seen this triangle before? Is it, I find it suspiciously particular that the angles on the support of that triangle are very similar. When I take it above, is it not true that everything that comes out of the bottom of that blue bar has come back to it as quickly as it's left it? Where'd that come from? Isn't it? Doesn't I thought that was on the other side? You know, that's an interesting point. Like, what do we? Why do we act like this here now? And could it mean that we're interested in producing this equivalent out of that? This triangle, it might act like this as well. Like just ridiculously trying to get everybody out of the middle of the range. And I mean, normal, sure. Best thing to understand is that when we leave the triangle, it's likely to come back to it. So don't obstruct that from happening. Because, a lot of people, they see it like this, right? It's going sideways. They don't even know it's in a triangle. And then it explodes and they're in it somehow. So they drag their stops up, right? And then as it comes back and does this, it doesn't matter which way you're long or short, it gets you both directions. And that's if you've been trading in this area. Or what would make you safe is if you caught this point or this point. And I mean, like, hardly, you know, for what it's worth. Neither of those points were made safe by the end of it, because you end up getting topped out here anyways. And then I'm like, well, we have a triangle. When we had a triangle, it made an effort. Do we now? Because having a triangle before meant that before. Does it now? That's another interesting question. I consider all this. Because I'm like, it's in the middle. There's a lot of maybes in the middle. That's my saying. Because you don't want to be too convinced in the middle of anything. Because it's like it's like you walk up to a magician and they're they're doing a magic trick. You're about to be tricked. It's like, are you gonna give them $100 or something like that? No. It's like, it doesn't. They're tricking you. That kind of skeptical attitude needs to be taken in the middle. Like, you're not gonna do the program or whatever. It's like, something is very sketchy about it. So you want to be very, not not swayed by the maybes that are in the middle, because there's many different things that are like, oh but this, oh but that, oh but this, and like all of these variables, and it's like, but wait a second, but we're in the middle. And that's more important than anything anybody has to say, because it's like you can say, oh, it's got all these technical indicators, everything's perfect, but then I can respond with, but it's in the middle. And then it's like, oh yeah, that's true. And you know, it's not like it never leaves the middle, but I'll tell you one thing. There was always a better position than the one that it's offering from the middle, and why didn't you get that one? And why didn't you keep it if you did have it? That's another major question. Because I'm like, why is the middle good for you now if you decided to give the best up earlier? You know, because you're clearly capable of catching the best, just not keeping it maybe. So that's something to work on. You know, you don't gotta just like shut off, right? You gotta focus on what do you do to make it better every single second. This is like everything, you know, that you're made of coming into existence, right? So very seriously, you have to take it very seriously. The inverse head and shoulders is fighting back. It's interesting to see too, because I'm
Yeah,
like,
yesterday it would have went down, eh? And today it's popping up here. So
the head and shoulders, or what do you mean?
yeah, yeah, the inverse head and shoulders.
Oh yeah, like it failed.
Yeah,
It's yeah, yeah. Of course it does the opposite today. Yeah, it's
I mean, it was
interesting.
just yesterday.
Yeah, and I'm like, look at the design of the low of day here too. Like easy to kind of see a inverse head and shoulders, similar to what we're doing here, but here, there's a smaller version. And I mean, like that's another one where it's kind of like putting it out there, or even here too. It's another one that worked really well, and it was a head and shoulders as well as an inverse head and shoulders, and it played out the inverse. So yeah, I see that. You know, it's day by day change, right? Because God forbid you think that the head and shoulders means one direction, because it'll prove you prove you wrong real quick. I mean, how many days do you need? I mean, by 2 days in the future, we will see a head and shoulders fail. It didn't used to be like that. 5 years ago, I would have been like, yeah, right. Like find me a head and shoulders that fails. Find me a rising wedge that fails. And don't look at the daily, because they all failed on the daily because everything went up all the time. Well, it did that at least. And I mean, like, it's possible for it to do that again at some point. We could be doing it. Nobody realizes that, yeah, we've been running, 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 but we might not be contained within the range like we used to be anymore. We might be back in the old ways again. Maybe we were just in a counter trend move. You know, it's an argument. Like, and I could fight against it. I am thinking about it, but it is interesting when you consider the facts of the situation. You can compile an understanding quite quickly when you start to see that, it's so inclined on making these the facts, and you can write them down and notice them and understand them and say, hey, these were the facts of this environment before. What are the facts now? And it's like, well, then combine them together. What do you come up with? And that's your environment right there. And like, you can work with that. There's different variables every day. You don't expect it to be the same way every day. And the market's trying to teach everyone that by making the head and shoulders work today, whereas they didn't yesterday. Now, that's an interesting point. Oh, thanks, man. Yeah, the support of the view app instead of being resistance, like undeniably, we've taken a triangle that otherwise used this as a resistance. Now we have a triangle that's used it as support. And I mean, like, well, okay, that's another fact. What does that mean? Does it mean that we are comfortable putting consolidation on top of the barrier that was otherwise holding us down? And I mean, like, what could that mean? Well, we've found the strength to not only break the barrier, but to turn it into support. Interesting. The 61's at the POC in the node down there. If I zoom out a bit, that becomes the POC. And I'm like, well, I was just looking at the tip of the triangle, and I was like, what's the best thing about the end of it? Well, what's the best thing about it? The end of it, and it's the tip of it. You know, when it basically can't consolidate anymore. You know, the job is to lose more volatility until it can't lose any more volatility because it can't go any more sideways or any more movement at all because it's right into the tip. And the next thing, the only thing it can do is leave. And you know, it can do that in a different way. You know, like a jack in the box kind of thing. You know, winding it up, winding it up, winding it up, and then finally, no more pressure can be compressed within this environment, and it's forced to release the energy. You know, that's one way to look at it. And you know, typically the energy that it's built up in the area can definitely, you know, amount to the amount of energy that it has, you know, when it leaves. And we can see that both triangles from before managed to double. And even on this one here, when we look at that exact same triangle, it's like, tell me it's not struggling to get past the doubling point. And I mean, it did get past the doubling point here too, by that much. I mean, like, okay, it's the same thing. I'm like, all right, all right, all right. It's basically the same thing. I mean, like, doesn't mean it has to have the same result, but it is doing the same thing undeniably so far right now. And I'm like, all right, well, we're doing it in a different spot, which means it is different. You know, what we're using as resistance is now support, but we're doing the same thing. Um, and I mean, you want to know what's funny? Is it's not wrong to look at it like this is a one way that it can do this. This is today's way that it did this. That's my point. I mean, how common is that? And how don't we see that in this? If it is so simple, you know, should we look for it more often? I'm like, well, yeah, of course. It's always good to keep an eye on these moves. And they happen very frequently. Now, I can't help but notice that, sure, we made a consolidation and it had a spike on the top, and then it took that spike and made it on the bottom. But like, I'm like, well, do we like have that right now as well? I'm just putting it out there. Like, it is something that we've done before, where undeniably we've had a consolidation and there was a spike on the beginning of it. The spike on the end of it did lead to the largest move that took the entirety of that back, and it also rivaled this level again. And I think that given the next opportunity to get to that level, we will see it will not be treated the same way that it was treated. Contrary to popular belief, I think. And it becomes a support next time we get to it. You know, and it might be like, oh, after all this difficulty, that place becomes a support. I'm like, well, yeah, it's kind of the way it works. Like, all that difficulty meant that, you know, if you fought through it, you got this. Meant that anybody that bought, even if you bought here, they were allowed to be right just because they handled this. You know, not to say that was a good thing or anything, or that it ever should be done, but anybody that did buy on that downtrend, anybody that lost money buying on that downtrend is like, well, what, you know, at the end of the day, how could you manage to not make any off the return? And it's like, well, many people couldn't catch it. That's the idea. You can see that by the time it got to the point that mattered, many people have already burned up their tries, shot their arrows, And that's a daily thing. So like I said before, it's not only just a little bit out of the top and the same amount on the bottom, it's a little bit more usually. And we did keep up with that in this. But something tells me that this triangle doesn't double down, it doubles up by the end of it all. And it's acceptable for it to be from here, 61, the gold zone. I mean, like the level of the week almost. The worst place to break a trend is from the VWAP, especially if it's bringing volatility to the VWAP, and it's a shame too, really, because the volatility is actually quite nice, and the VWAP does nothing good for it. But it's good to know that though, because if you expect it to continue having the volatility that it had before it met the VWAP, you could otherwise be disappointed with the amount of movement it has, which might adversely affect you. But of course, it will leave the VWAP after its time with it, like every other time that we've left the VWAP, or we'd still be at one of the other VWAPs that we didn't leave. And at the end of the day, we do leave them. It's just when we get to them, it's the problem. Because it can get stuck to them. Like stuck in the mud is one way to look at it. Like it's hard to trek through it. You could say, I don't know. And I'm like, well, okay, what about this? Do we do we do this kind of triangle when we make any kind of consolidation, and is it appropriate when we consolidate to be confined within these kind of areas? Because every time that we have consolidated, it may not have used all of the barriers, but one thing that it can be interested in is the time that it takes to do it and the space that it takes to do it, like the rough amount of time. Like you can see it didn't really use the whole amount of space, but it used the time. This one's using the space potentially. Same as this one. And it's also the spike out of the bottom of the consolidation. Like I said before, this spike can happen as well. Now I think that this bottom spike isn't going to be as violent as the last one. I think it'll retrace a lot sooner, and I think it makes this level red yellow. Like an attractive level. Like literally, people are still heard about what it did last time. I'm like, they should be attracted to it, not heard about it. That's contrary to popular belief. But if you're already in, it doesn't matter to you. But I just say this just so you keep an understanding. At the end of the day, whatever was just sold off there is subject to being bought back up as quickly as it was sold off. Springs can happen, so like little spikes that happen after big spikes. And it can look like this. And that like a very common, kind of like this, big spike and little spike. And what did it do? It was the exact opposite of what I'm trying to show you here, and I didn't even intend for that. I'm just saying. Uh, you kind of see what happened down here. Even here, man, it's tough when they do it this big, though, eh? Like when it's like a big spike back into it, it's like, yeah, it's the same thing, but rough. And I mean, like, what is it going to do to the people in the middle? Do they get two spikes? Probably. I'm like, literally, like, with all that space with the red yellow line, I mean, even if we get to it, do we exert all of our energy in trying to mess with the VWAP? I'm like, yeah, that could happen too, but do we not break it then? No, we break it, I'd say. Ultimately, it does break. It's just trouble, is what I'm saying. Like how many spikes do we have? How many spikes can we fit in here before it breaks? Now a few. So if it can, it must be allowed. And it's just more volume at that 61. And at what point did we return to the tip of this triangle or ever test it from the underside? This one, perhaps? So maybe the VWAP can get a consolidation and separate the two spikes. Another very possible consolidation area. And like hitting it from above too is not bad, but it could be the baseline of the spike where the spring starts from. So like on the top, a little bit of a pullback at any given time is acceptable. Because because it lacks it. So it's like if it lacks it, well, and then some could say it needs it, and I would be careful with that. What it needs more so, I'd say, is to return back to the triangles in a better way. This one, terrible. I think it didn't really return back to it at all. Does that mean the value of the break of the red yellow line could be to get back to the untested B points up here as well as that triangle? Yeah. But a chop first, perhaps? I mean, it's not the end of the world. Wave 2? Could do wave 2. Now, I just looked at that and I was like, well, did we come down on anything like that? We came down on a 5-wave move, and then it did the 3-wave move up, and that's it. It was done. It did 1, 2, 3, 4, 5, and then the counter trend move is, or the corrective wave is 1, 2, and 3. Okay, hold on a second. You want to know when it comes down from 1, 2, 3, 4, 5, and then it does a counter trend move 1, 2, 3? You know when it ends there? It's most likely part of another 5-wave move. It looks like this. Subwaves. Think about it. Corrective waves are 3-wave moves. When they end at 3 waves, it's subject to being a corrective wave. Because when they end at 3 waves, then the next wave is typically, it could be an ABCD pattern, like 1, 2, 3, 4, 5, and then you do 1, 2, and 3, and then you do 1, 2, 3, 4, and 5 again. Basically, you continue with the same move that began, separated by 1. And this happens all the time, we see this pattern. A, B, C, D. And I go, basically the A to the B is equal to the C to the D. In my sketch it's not, okay, but give me a break there on that one. Essentially that's the idea of it. It's not the exact same. Like what if I was to make it the exact same, basically that 5-wave move here, 1, 2, 3, 4, 5, and then you've got your 1, 2, and 3. I would make it like that. That's your equality. That otherwise would be seen there. Exactly the same distance. Because you can see that in this, just to like finally just nail it in there, the idea that this A to B is exactly the distance of the C to B, and that this, whoops, ultimately is here, and is exactly the same. Values are the same. And I mean, well, when we do a 5-wave move, is it not true that we have to go through this process and actually fail its ability to get back to the first point? So does it always come back to the B point? No. It doesn't. It has to be in an appropriate environment for it to do so. And in this case, you want to know what I see here? I see 1, 2, 3, 4, 5 down, and then what is this? This is a terrible little move out of the bottom. And was it one that we saw before? Becomes another question. I mean, like, sometimes we're in the business of doing the same thing. Undeniably, it did return back to the tip very well. And it's like unobstructed almost. Like they're making their mark almost. And imbalance is still a ways away, so we still have plenty of time. So it's on the chart though, so we can see how much space we have for any kind of new patterns that are out there. But I'm like, where did I get this triangle from? The big one. You know? That one was basically to double. And where it can double from is the 61. And I'm just gonna like turn it down a little bit. Don't need to stare at that too much. Good idea of what we are capable of doing. Because the value of a triangle today has been to double it. And a little bit more, not gonna lie. Because like look, this distance that it did extra, I'm being pretty rough with it there, but that distance, isn't it suspiciously particular? That's the distance that we have between the two other triangles, or the distance that it left here. I mean, like, I like it better this way. It's an interesting distance, though. Can't help it. So we've got this kind of spike on both sides of the medium level. When we were here, we decided to make spikes on the top. Everything that we did below it has always come back to this point as quickly as it's left it. And that was the medium point for this old consolidation. Now it's become the case that it doesn't have a lot of time with the red-yellow line. And if it loves the VWAP so much, well, it's going to have to break the red-yellow line to stay there. Well, good luck staying here when it breaks the red-yellow line, because it won't be in a downtrend anymore. And if it doesn't have any space with that downtrend, it can invite change. And you know, if we what we could be interested in is actually making this out of the other side when we're finished with it. Because I'm like, well, is it not true when we make this movement that in order to get this again, this movement down right here could be a consolidation where the movement out of the bottom is produced out of the top again. Like our bar could be here. And undeniably, it does have this movement to begin the bar. And in order to get the next advancement, it has to be produced. So it becomes a very intriguing fact that this has been the way that it has been, and so far it is not out of line with that way. So until it is, could we assume that it is doing that still? Because we've had nothing to assume, nothing to say that it's doing anything else, so that's the interesting part. At the end of the day, where do we pull back to? The area that had the most volume. Now, what do we do when we do this? We come back to the node where all the people were like in, and anything that they were given was taken back, and likely their positions are going to be liquidated. And when we do this again, we can advance on what can look like W's. Now, instead of making this 4 points, let's say you made it 10, and it's just just an insane chop, and an insane chop. We're still rising on W's and coming back the whole way, but except we're doing it this way. Still the same concept though, and I understand that the components are all the same. You know, you just have to understand that the area that is the blasty bit, you know, the part that is the most exciting, that makes everyone chase and oh my goodness, it's all over kind of thing, like the new trend has begun. It's like, well, why didn't you find value in the end of the old trend? You know, the area where nobody found any value. And it's like, well, that's the that was the expectation at that point there. And off of a trade from here all the way up to that gray bar right at the top, how could not enough profit be taken off to ensure a stop at the extreme? Like, let's imagine you take Let's imagine you, like, for instance, even if you've taken 2 contracts and you took one of them off here, do you know that the other contract would have to go all the way down to here before it could physically affect your account negatively? Now, what happens if you had 3 and you took 2 off there? Can you afford to put your stop at the bottom? Do you know that that contract that if you took 2, that one contract that you took off paid you this many points, 102 points, right? So if your next contract that you have is at a 1 point loss or a 2 point loss, are you still going to be left with 100 points by the time your trade's over if it's not meant to continue? But you know, when you do that, you don't have to catch this low or this low or this low or this low or that low or that low or any of these lows, because these lows are tough like these lows. And they involve patience and persistence. But guess what? You can have a stop placed at the extreme. You can have some alerts set. You could even have a hedge going where you can profit against your position if there's targets that you can go for. But at the end of the day, keeping that stop at the extreme because it's justified, because you've taken off enough profit to afford a stop at the safest place possible, where the market undeniably has to end every trend and go to an entirely new extreme to get you out. And it will, because that's what it did every single time here. So you have to make sure that you fight for the right spots. If it's not meant to be, if it's not the extreme, then it will come and get you out anyways. But if it's the extreme that, you're meant to hold because it is the one that matters, well, then it will treat you accordingly. But if it's not the extreme anyways, well, hopefully you've taken off enough profit to justify keeping a stop there. Because it's like, okay, let's do another example. Imagine you had 20 contracts down here and you took 19 of them off up here. What does it keep one contract at the bottom? Huh? Like, you're literally unfazed. The majority of your profit can't be taken back. You'd have to literally drop thousands of points on that last contract. So to prevent that from happening, trade management. But first you have to know where to get in order to be able to manage something that's even worth something. So being able to target something is the first step in understanding how you can be positioned. Because like I say, like when you play sports and there's a goal, like or you play you're hunting and there's a target, like you've got a net that you're trying to get the ball into or whatever. There's a target, there's a goal. You have to look at the target first before you're going to get anything into it, right? So you find the target first, and it's just like anything else. You find that target. Does it respect your target though? That's the interesting thing. Sometimes it takes a lot of time, space, and energy to develop the liquidity necessary for the institutions to get these moves in play. Like, how much did it take to generate this move before? Well, could it take that much again? Like, that's something to really consider. And this is a line that's already been fake breaked in the past. Like, it's had a fake break. We're leaving the VWAP. Do we test it from above? I mean, what has happened every time we haven't tested the trend? Now, it's not so bad because it can run away and hit targets and break levels down, but it pays the price for not retesting. Not so bad to allow it to retest. At the end of the day, the ignition candle, if profit hasn't been taken, it's an appropriate place to secure profit so that you can continue holding for anything that you do want to keep to the target. But it's like I say, it can be rough on the people from the middle. When I was saying, hey, the spike can have a spring. Could it have 2 because it's in the middle? It did. It literally did. Like, it went spike, and then I was like, the spring? Like, that's how I explained it before, spike and then spring, right? Just like the top, we had spike and then spring, and that was the top. We did that, right? Same deal. And the bottom, was it not? Spike and then spring? It even took like same amount of time roughly. And I'm like, well, but then it's like they had a middle area here, and I'm like, this is a terrible area, and it did 2 spikes. It's a little bit extra tricky, and that's fine. Not the end of the world, especially if you're in from the bottom. What does it matter? Just watch the show, like I said. And if you're in from below this low, then you got to watch this show as well as I was explaining it. And I'm like, well, that's fine. At the end of the day, this green bar, we broke out to it, so we didn't break out through it. We're gonna break out through it once we get to it. The retest though, I was talking about that. You know, the idea that we test the VWAP to double whammy, it's like there's two things that like to get tested here. What's happening to that gap too? Because I mean, we've been trying here. Looks like there's a gap there, and I mean, it's been very concentrated. And I'll make it clear, you know, we could use this little level in the future. It reminds me of a gap that I dragged down earlier actually, like it could be this one. But it doesn't get to be gold. Yeah, they added the ability to draw a middle line into the rectangles now too. Yeah, the people of the middle, it's tough on them, you know, and it's like, as much as, you know, I love the 61 and so on, it is lower middle range. It's not the extreme by any means. There's always been a better price than the 61. Like, what happened at the 100? You know, it's a good question. It is. And it's like, well, you know, at the back of your mind, you've got that that future self telling you why don't you go for the spots that end up being the 100? Why don't you go for those spots and keep them? And if you were there, why don't you end up keeping it? You know, it's like that's it's a major thing, because it's like, why are you settling for less is what they're trying to say. Because it's not like it's not going to offer another extreme again. You know, that's a joke, right? So it's like, well, why settle for less when it offers the middle for more? You know, most of the day could be spent at an area that's not attractive. It doesn't mean it's the right place to trade though, right? At the end of the day, that's a good point. And it is prone to staying in the middle for a long time. Like, look at the best prices. How long does it stay there for? That's my point. The prices that offer the most movement, they demand precision, not persistence or patience. Because without precision, it's tough. It's tough. It means that you'd be rowing backwards trying to get your exposure, and that's the intention of the people that create these environments. Because they're like, hey, we're gonna make everyone find value in this area, and then they're gonna put their stops up down here, and we're gonna take all those stops and then hold it. That's what happened. And they were like, they think it's a good deal here. Well, we're gonna make them sell us their shares, and you know, they just become volume to us, and the ability for us to acquire our position so that we can move the market without them to their levels, because they won't be there to sell anything, because they won't have anything to sell. They'll be gone. And I'm like, it worked. It did it. They did it again. I'm like, geez. Look at the gap, eh? It's just like getting filled. I mean, like, I wouldn't be surprised to see this one like really strange response like next week. Weird like pinnacle reversal, like 200-point dump, just like pinnacle reversal on that level. Everyone's gonna be like, I hate this level right now. And I'm like, I know what you mean. I know what you mean. I know what you mean. It's not a great level. It'll be done soon though. I mean, it's gonna have to pick between this level and the green zone soon. Clearly it didn't care much about the red yellow line, but I wouldn't say that too much yet though. Clearly it might be acting differently. We just haven't seen how yet. At the end of the day, it's without the red yellow line, and that's a fact. Does it act differently? Well, I'll tell you one thing, we're above the gray zone. So it's amounted to that at the very least. Not by much, but it is a fact as of now. So we're progressing instead of regressing. And that's been the way since we've broken the trend, I suppose. And I wouldn't say it's very healthy, but you know, they're filling the gap. Everybody that does trade right now is ironically putting volume inside of that gap. And how much time would we have to spend here at this rate in order to fill that gap? Well, is the VWAP capable of keeping us here for that long? Well, I do remember talking about this B point here and saying, hey, the VWAP has to come all the way up to it before we get here. And I mean, we're here. It's finished. They can kind of leave now, which is, I think they're going to be interested. 'Cause how much more do we need here? Who wants to be here for any longer? I mean, I don't think people are trading here anymore, which I think is going to mean they have to move it somewhere else so the people trade there again. Because they don't want like stale spy or something like that. What is the stale spy doing? Oh yeah, stale. No, 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 no. Can't even look at that. Terrible. Not that the Nasdaq's much better, honestly. I'm just playing, but you know, it is very, very bad movement on their part as well. Not that they can't move. I mean, sometimes the Dow moves the best. And one thing that I don't check very often is the Russell 2000. Oh, Russell 2000. Yeah, see, they're better. They move with actual candlesticks that print patterns and chart patterns and move properly. You know, look at that giant move right there. They wake up. They make moves. They're good. But these are penny stocks and really low cap. Well, no, not necessarily penny stocks, but they're small cap stocks. Hold on a sec. I suppose it's hitting the B point right there. I don't really care about it too much. Look at that retest of the red yellow line again. It's been all over that line. This is the daily downtrend. In conquering that line and getting on the top of this spike here, ooh, that could be good. That could be good. Really, really, really good. And I think it could happen on a squeeze. Okay. Eager to get to the green line so that we can respond negatively to it. That's not good. But I suppose one way to do it. The best way to get through that green line is to go slowly to it. You would think they would do that, but I guess this is part of the process. Fast is not working though. They have to they have to spread the orders out a bit more. It's not working properly, which is fine. But they'll get their way. My words. So we mustn't be surprised if the green zone leads to the red zone. And honestly, the red zone could lead back to the green zone, and that's terrible, honestly, because you know it just means everything's kind of subject to trying that. Which is fine. At the end of the day, what is it to somebody that's holding from the extreme? When it's done, and this becomes support when it's done. We just have to ensure that that's contrary to popular belief. What I need is for all of the public to put their stops at the high so that they can get triggered and then we run through them all. I think they're setting up for a short squeeze, and that's what we need to get this show on the road. Haven't heard that expression on time. But yeah, that is the case though. Now, an interesting point, I'd say. We've got to this level, it's prone to propelling it through it violently, so we must be careful. There's a point at which could be considered the ignition candle as well, something to secure profit if you haven't already. We're not at the high of the node yet though, eh? So interesting that it has to get through the green zone to get there. That makes for an interesting retest. I don't mind that idea. Why not? Not. It's contrary to popular belief because retests are supposed to affect things negatively, and I think that's not not what people are gonna get in an interesting position. Let's say it's the least here. I think they're trying to set them up for a squeeze, like I say. So they're trying to get people to short it. They're trying to make people think that they've missed it, and the objective is to get through the green zone. I mean, like I say, what not to get through the green zone means here. Possible, but difficult. We create trends like this red one. I mean, like, good luck with that, right? Not getting down there. I don't like that it didn't test it very well. I'd rather a retest so we don't have to in the future. No stops are safe above the tip of the old triangle, but I do think that this old tip of the triangle is going to get tested. That's the high of the node, actually. I'm like, what is this going to be, wave 2? Is it not an inverse head and shoulders? You know, like the whole thing. It might be problematic and then go. That could be a thing. So be careful for that. After all, make sure that enough profit is taken if you're in from the short-term middle area, the 61 or anything. But if you're in from the extreme, it's like, why does it matter? It doesn't matter. Let it do its thing until it breaks the red, or until it breaks the green. It's playing with people and it's hurting people. Like, well, I won't any part in that. But it's good to understand how they're getting hurt, you know, because it's factual that at the end of the day, when it prints a pattern out and it's supposed to work one way on Google and it does it completely backwards. I mean, well, take note of the environment, right? It's like literally. Nice. See, led them on, stopped them out. Now, sometimes it likes to do this at the same level because it like rounds them up. Really reminds me of this environment right here. And you want to know when that last environment was associated with? The last bar that I had. So, I mean, maybe it's magic, but I find it to be the intention of those with all the money. Because it's not the collective of the people that don't understand how the market moves, moving it with absolute precision. I won't accept it. You know, it's just not the case. But they'd love to have every individual believe that though. Because then they don't look for the precision. They believe it's random movement, and therefore the results are random, and Not good. Because, try telling the institution that their results are random. They work hard. No way it's random. The green, yeah, it's a barrier until it's a support, really. That's what's going on with this right here, from what I can see. And I'm like, well, we did do this whole spike thing. We did do the consolidation. We did have like this little, like, that's like a sorry excuse for a spike in comparison to what we did on the top. And it wasn't even. And what's funny is doing this spike would have got it to the B point. It literally didn't even manage it. Why not? Why not? It becomes the next question. And I'm like, anytime we get out of this, we can come back to it. Doesn't matter if it's a W or if it's like it usually is now. Same thing. Because the area that it makes in a W, like I say, it can be 4 times it touches the same area, makes a node, and if that node stands out amongst this not being a node and this not being a node, and then if it has this same kind of confinement area in here as like a M, and it does have a node, I'm like, well, you gotta put 2 and 2 together here. Clearly, this is the area where it likes to trend, and this is the area where it's consolidating. And obviously, that consolidation area has a lot of it's in similar with the other areas that it finds the need to do the same thing, right? So I'm like, okay. When it's trending, it trends the same. When it's consolidating, it consolidates the same until that environment changes. And what can change the environment? Well, when we leave the green zone and red zone, when we end the patterns of the environment, when we break out of the tips of the triangles, and all these things. I mean, like, yeah, you could be drawing an endless triangle on this. Like, at what point has it not been a triangle? It's been a triangle, like the whole thing. Um, And it was a triangle when it was here. It was a triangle when it was here. It's all been a triangle, and it's like, oh, what keeps going up is when does it stop being a triangle? I mean, it's very tough for it not to be a triangle here, clearly. So how do we, yeah, how are we gonna make it through the tip? Well, does it end up being a triangle for the imbalance? Past 2 days, we've managed to centralize for the imbalance to the point where, we can see that to make it to this time of the day, for the majority of the public, it's actually quite difficult, I think, especially if it's been something that's returned to the same level countless times throughout the entire day. Everybody that's holding for the long term doesn't really get much out of today. And they lose focus on it, I think. But I think it's really important to understand the minutia of the day, and how close we are to the end of the consolidation and what it could mean, and how people have been treated inside of that consolidation and what that could mean. Like, don't you find it suspicious that it's like, oh, everybody nice and easy in the consolidation, there's a nice target for everybody right there, everybody try and get it, and then it just like and like stops everyone out, and you can see that the node that was grown here literally, it was bad for them. And then it gets to the target. I'm like, oh, suspiciously particular. What, did everybody want the volume that was generated here so that they could accumulate it and then get to the target at a better, farther price than the people even wanted it? I mean, it seems too perfect. It's illegal to do that, but try catching them. They don't even know their name. They just put all the major funds out there and everybody looks at them. Everybody looks at Warren Buffett. It's perfect. He's the best to have everyone look at. He's doing it really proper. Like, not divulging any kind of like information on what they do and stuff, and it's like very black and white, like a face to look at, to keep questions off the people that actually matter. But I think and they're teams. They're not individuals. I think people are foolish for thinking that one individual is in control of it all. Or else there would be more one individual entities on Wall Street. There would be more emphasis on individuals' ability to move the market. More people would talk about the impacts that they were able to have on the market, but they don't, because they don't have an impact. So it's interesting. But collectively they do. And if they learned how to not make that dissipate so quickly right after earnings and give control back to these people, it's be nice. That's fantasy. Because I've come to realize it's against human nature to want to do the best trade. You can have the book right open, and it's inhumane for people to follow the rules for it. I've learned to notice. It's like you have to really train to want to do it, to focus on it. But everybody wants to put their own flair on it because everybody's taught that everybody has their own individual trading strategy, and that's how they do it. And I think that it's math. We don't have individual trading strategies for grade 3 or individual strategies for grade 3. We do it all the same because there's one way to do it, the best way it's supposed to be done. The way it can be done every time you're supposed to calculate. And, you know, use different numbers every time, sure. Just like we have different variables every day, different candlesticks. But do we use the same process? Yeah. In a general regard, for different calculations, it requires a different um, calculation. Like a different process to find the end result. And in this case, there's how we can position ourselves for the three variables that there are: upwards movement, downwards movement, and sideways movement. And we're exposed to one of the three things happening at any given time, obviously. But the more we understand about those things, the more we can find ourselves in an area that we understand, in an area that we feel comfortable in. Because the areas that you find most comfortable in any other event, you're very informed of. You know, it's like you feel that way because you understand everything about the environment. You know, unlike the new unforeseen environment that nobody knows about and everybody's worried about, right? So that's like, if you've been to many environments, you know that your ability to calculate is that much more flexible than somebody that's only ever seen one environment. They may fear other environments where you've been to many. So it's like, same thing applies here. And this point right here, remember I drew this triangle and faded it out because the intention was that it doubles. The green bar is an interesting one. It's like if we don't break out to it, we break out through it. That's the saying that I made. And essentially, when placed like this, you can find, absolute precision in its respect for those levels. And when we do break through it, it will be after great difficulty for everyone. It's like, oh, you must really want to be exposed to it to have to be in through all that. Because a lot of people, they don't want to wait for something they don't know they're waiting for. Why would they wait if they don't know they're going to be getting something good out of it? Wouldn't it be easier just to cut it? Because it's clearly not doing anything for them. So it's like, no, it's not. They have to see beyond the consolidation. What does every consolidation do? It doubles at the minimum. Because at the end of the day, if it didn't, we'd still be in the last one that didn't double. But every single one has ended. Every single consolidation. So, and I'm like, yeah, that's interesting. Except for the one that we're in, ironically. But, you know, that's going to end too, like every other one. Mark my words. I can't believe it didn't get this B point. You know, that's kind of weird, eh? And it's by a little bit too. Was it by this much? I'm just gonna take this over again because I do recall that being the distance that we didn't make it to the other B point. I'm like, it looks like it a little bit more on that one. Yeah. Okay. Interesting. Unless that's actually BS and the B point starts from here. Could be an argument. Sure. When we actually get to that B point, don't be surprised if it goes to the gold zone instead. Which is a fair argument. It really is. It really is. Because, I mean, it's got a little bit of a gap there. And we marked that today. That was a today thing. But this gap, what did we do to it? Is it not true that we put consolidation below it, and then we went above it to step on top of the consolidation part? And we've done that, and it found it positive to do that. Or it wouldn't have made it back up to the green, or, yeah, back up to the green. So it's like it's a factual argument, right? It's like I'm showing you the proof that it is that way. You know, it chose to do those things. Yeah, and another thing, you know, all these triangles, right? Great at going down. Like every single one of them, it's terrible. What about this one? Why didn't it go down? Does it change that much? Could be the question, right? Because I mean, undeniably, it didn't go down at all. It doesn't even care about going down. It didn't even break the support. I mean, the audacity, right? To be this triangle and not to go down. Well, things must have changed. After all, you want to know what's changed? Two red yellow lines have broken. And this red yellow line, oh no, it can't be readjusted. Is there no high beyond this high? Yeah, there is. We're going to put this line. I was going to say, we're going to put this line here and make it red yellow. All the way from the top, right? And you know what? I'm gonna just take off the fib channel levels because like we got the green bar, we got the red bar, we got a lot of other things going on. We don't need all the other lines. We can take off some of these other ones too. Like I mean, like in the event that we ever hit this blue and yellow line again, like it would hold almost certainly. But like, good luck with that though, right? We're taking it off. I'm not gonna complain if it does get hit though. We'll put it back in. If it is erratic. It's great acknowledgement of the VWAP too. It must be placed at a particular spot. Like this is incorrect. But it's not terribly incorrect. It's just not used as well. So same with that. But it will be using other ones now, I think. Like this one. This one from the past. I think we're about done with that one. Why didn't it change? Okay. Yeah, that one's gonna have one of its last few tests before we get on top of it, I think. We're getting on top of that one. Could be on the brink of a breakout, beware.
We'll be a D-line to an M.
Yeah, that would be down though. So we gotta be careful with that. Like this is a point where it could like propel through the green because it didn't break out to it. It's been coiled up, and like this having relieved the green means it's not holding us down anymore. What was the thing that stopped us from going up? It was that thing. And without it, well, God forbid we can't go down anymore because it's not holding us down anymore. So I'm like, well, what would be the next thing in the sequence then? The red one. And I'm like, well, does it have? Yeah, well, we could get to the red one and have a negative response. And I'm like, well, it's tough, but this is a really intriguing spot. I think they're trying to thread the needle right now, actually trying to see if anybody's going to chase it. They can't tell if anybody's willing to chase it. They just have to have been hard on them enough. Like hopefully they got rid of all of the chasers, because every time that anybody's tried to chase out of the get-go, they've overlapped them well. They've made sure that it's not working, or they wouldn't have advanced it with them in. So they've managed to get it to this point, and they're wondering if they push it, are people going to flood? They have to make sure that they don't. That's the idea, because it's very likely that people don't have the green bar. Very likely. Like less than 2% of the people in the entire world will probably have it. Yet it will be used like it's everybody's using it to what they would think, because a lot of people think that the people are all aware of the movements and they're responsible for it. But I think it's the people that work till the end of the day. And where are they? They're the Bay Streets of the world, the Wall Streets of the world. They work to the end of the day, and they're responsible for these movements. I believe it. Because it's like it's somebody's task to retain the gains. That's what it is. And they're like, can you keep it in a range all the way up here? We don't have to worry about the retracement that everybody's looking for. We can turn everybody's bearish sentiment into something that can propel our assets further at the highs. And contrary to popular belief, a lot of the people won't be interested in buying when it's, near all-time high. They'll all, be trying to short it because they've seen that in the previous ranges it's been so good at coming back and forth. And when it stops coming back and forth, they all lose their accounts and they go back to work. That's normal. And then they try again. Here's the break of a breakout. Like I said, it was exactly on the pinnacle of the end of the green zone. Mark my words, like I said, it's not the work of the public, but the work of people that intend for this to be exactly the way it should be. And this is the way it should be. Now, it can test the green zone from above. That's normal as well. But we shall see. It's in a mode where there's definitely some squeeze action going on. If they let it off too much, then they let people out. They want to put the pressure on right now, all the way up to the red yellow line, so that like moves like this, they manage to get more people short, and that's what they're trying to go for, I think, right now. But they want them to be literally busting accounts by the time we're getting to this level, like really sweating buckets because they're trying to inch their stops up to give themselves a little bit more room, and the people that are short are worried about it. And when it gets above this line, it gets tested from the other side like a blue and yellow, because it shouldn't be getting above that line in a normal environment. But I mean, the break of the red yellow line not getting above that line, it's like, good luck with that. It's easier to become a support than it is to maintain it as a resistance. And if they can stop people out to get it above that line, I think that's what they're trying to think of how to do it right now. And they might make a head and shoulders, one of the people's favorite patterns, and I don't know how they keep falling for it, but it fails if it forms. And you know what's funny? Is they showed it working to everyone today. They were like, hey everybody, look at this one. It worked really well. They give us that here, oof, goes the other way. And it could be the cause of the break of the red yellow line. And it's the Google pattern, propelling everybody in the wrong position, getting them to put buy orders at the high. Because that's what they're going to do. They're going to put all their buy orders at the area they couldn't get it through. And the institutions don't want to be caught loading positions up at the very top. So how can they get buy orders to break that area if they're not going to do it? Well, if they make a little crappy head and shoulders, people might short it. Where are they going to put their stops? And if they shorted it, their stop are buy orders. So if they just put a little bit of sideways consolidation into that, and then basically dry up, wait until everybody's done shorting it. They don't have any more power to short it anymore. Put a small order in there, it stops everyone out. Everyone gets filled, and we get through the level that otherwise has been holding us down for many days. Or, well, not many days, but feels like it, for crying out loud. Not many days though. It's just a today thing. But we're through the green bar now, and we've tested it from above, and now we've chosen to come up and have the audacity to rival the spot that we turned around to do the retest. So undeniably, once we get past that point, it is in the continuation because it has continued past the retest point. And this is the way I've come to recognize it, the way I've come to explain it, the way the clearest logical way to be able to understand that movement and to communicate it. The 61 too. How did I not think of it? How many times do we need to see the 61 before we remember it here? And I mean, like, it's been sitting here for 5 minutes, and I only thought of it now. I'm like, well, geez. But we get on top of that 61. We just get people to short the 61 so we can take it from them. Ironically, don't. Yes, yeah. I don't want to say what to do, but be careful. I'd like a little bit of a predominant test of the uh, navy blue area in the middle there. Like, that's a giant node, eh? Like, I wonder what it looks like now. Like, how much, like, we've, like, put a lot of volume in there. It started out as, like, a really, really strong identified node. And we'll just look at it one more time here. Whatever decides to load. There we go. And it's like, wow, look at it stand out, right? And then we went on to make that level. This level, look at how much it stands out here as a level that it's found important. And now, or they've conquered it. But the way that they did the lows, you know what this leads to? Up and sideways. Contrary to popular belief, it's this that's struggling, or that makes people struggle. But, and you can see why. It's not very friendly at all. Oh yeah, the blue and yellow line. Something that's notorious for being able to hold us down, obviously doing the exact opposite, and it's trying to get us through it. Like everybody that took the 61 is now a buyer or a loser. It's not a good thing. So they were fuel for the engine here, for this campaign, as Wyckoff would have called it. Really interesting. Oh yeah, we test that from above, and that doesn't count either. That doesn't count. They want to do that better. What about the negative response to the red yellow line? Could that get us to the blue and yellow line? How about every barrier that we hit from now on gets us back to the blue and yellow line? That could be the case. So we first start with a 74, now we go 78. It's like, under no circumstances does anybody drag their stops above the blue and yellow line. It's the most dangerous line that there is, and it's not your ordinary trend line. And sure, maybe it doesn't matter. It's like, oh, well, this is just a tiny little move. Well, it matters if you lose your position because you're trying to retain profit when we're not even at the profit target yet. So there is a B point here, not gonna lie. So there is that. At the end of the day, if we're to turn this level into support, we know that these people are bending the reality of how these indicators technically work to benefit their own positions that have been accumulated off of the difficulty of the public. It's like, oh, sorry if this was too choppy for you. We took your position too many times here. We came back too many times here. Same here. And it's like, why does it lead to such a clear environment? Like everybody's been knocked out of the way. Like everything happened exactly when it should. So we have to understand there's a lot of power in the analysis. The brink of a breakout, it broke out. Now we're at the 78, blue and yellow line. Every barrier can send us back to that blue and yellow line. We could acknowledge every barrier back to that blue and yellow line. And honestly, it's like, I'm just curious to see if it can. Doesn't mean you have to do anything about it. You just want to monitor the fact that it's healthy for it to do that. It's actually healthy for it to continue following the rules. The red yellow line is very close as well. And this is why you don't give up the long trades. And this is why not giving up the long trades from even today meant that you didn't have to fight for this. But if you did, oh, this was the best spot to do it from. Underneath every single B point that it made. The gray zone. And I look at a lot of the movements as kind of like potentially, wicks and spikes beyond the blue and yellow line. But I'm like, all right, what's the red zone gonna do? I mean, if the green zone did all that, and if the yellow zone started everything, what about the red zone? The red zone's related to the green zone. But I mean, the elephant in the room is the entire downtrend. Breaking that means that every characteristic that we've ever had since the point that we started going down could end. And we're left with more new stuff. And every time we're left with new stuff, look at how clear it is. Look at how nice it is for the people that are associated with it. It's interesting. The downwards movements, they might look like they retain for a long period of time. It's just because they might look like they're easy to hold. They might look like they're easy to catch. It's because they make you give up your long trades and go short so that you can't get your long trade back. And it's tough to endure these pullbacks, but it's necessary. If you want to keep the best price, there's no better way to do it than to have a strategy that allows for this pullback. How do you keep that price if you're not allowed to have this pullback? Well, the best way to have that pullback is to be in on it as well, to take it, make money on it, and then keep holding so you don't have to go long here. Now watch red yellow line brought it back down to the blue and yellow line, and I'm grateful for understanding the value of the blue and yellow lines at this time, but we're closer to the end of this relationship with them than ever before. We're going to see a change on how they work, and as soon as the people start to get familiar with them, it will change, and it will be on us to adapt instantly, or to anticipate the change, not to adapt to it, but to anticipate it. Because in order to adapt to it, it's already happened. And sometimes you can see the changes of an environment before the real big reversal has come into play, and that's really what I'm talking about. Like the idea of noticing those changes in the environment. Like, what about the thing that works so well for that trend? What happens when something goes wrong with it? Well, obviously the things are changing. You can't take it back. It's like torn paper. It's like it's just never going to look the same again. I don't know. Maybe they have a way to put it back together now. I don't know. But at the end of the day, where I come from, if you tear a piece of paper, you can't put it back together, and if you do, it's not going to be worthy of like sending to the passport office or something. You can't do that. So you you know, or submitting for some sort of documentation anywhere. It's just not acceptable. So you have to understand that there is a way, and when it's tarnished, it's like a trend. It's broken. You know, this trend here broke at that point. Doesn't mean it didn't get back into the trend and break again, but it did break there, and we can't take that back. Now we can draw a new trend, but I can prove to you that that new trend is just that, an exactly new trend with completely different characteristics. Now you might think to the human eye it's basically similar, but it's a 24-degree angle. This is a 30-degree angle. This one connected to the price at this time at whatever the hell time that was at 1326, and this one was 1338. Completely different, mathematically different, you know. So it's you know, people can do this and drag the line up, but you do get a different line, and the other line does not disappear, even though it may on your screen because you've moved it, but it still exists is my point. So it's just good to be aware of what lines you move, because they might still exist. You might think, oh yeah, this one's been readjusted and we're going to come back for the retest, and don't be surprised if we get this line instead of the one from the top. That's like the interesting part about that. And also, speaking of which, this line, that was a hell of a retest. We retested this line already. What about that one? That's a good point. Could it be off the red zone? Well, how much consolidation to get to the red zone? Well, if we consolidated here, we could get to the red zone without breaking the red-yellow line. Does that want to happen though? What are the odds? We can calculate it. But hey, this is trying to double, you know, eh? Like we totally did try and take that triangle and generate a triangle out in the opposite direction. It wasn't one that came on the bottom like every other triangle. It was a big triangle, and it doubled it to the upside, contrary to popular belief. And if you go back into today's video, you'll find that everything was exactly the way that it should be, the way that I said it would be. So it's good. Sweaty though. Just thinking. Too much coffee. Uncomfortability. So we're coming back to test the, what is it, blue node perhaps. I mean, it's not doing a very good job at it either. And that's one thing that's in there that makes it kind of hesitate is actually the B point, because the B point's been struggling lately. And I mean, like, you know, to not get there now is strange. Like, I mean, it struggles so much here. Like, and then it ends up getting there sometimes, and I'm like, yeah, it's like whatever between the distance that we were struggling and here. And I'm like, well, it's true that if we get to the B point, we'll be inside. Yeah, we're inside the blue. Could we retest the green? Well,
I hit the B point from that 188-200.
from at the top, eh?
Yeah, yeah.
Interesting. Yeah, well, let's certainly acknowledge that red-yellow line as well. It put it out there. It's like if people don't have it, they have it now. So I like that. I'm a huge fan. Yeah, this is the POC though. Essentially the level that has had the highest amount of volume out of all the levels on the screen.
Running into the trend line too.
Oh, really?
Low at 1347.
Oh, the low. Okay. Take a look. 1447.
No, 1347.
Oh yeah.
Yeah.
To this low here.
Yep.
Yep, that is the trend. It's interesting though, because like I question whether or not it's exerted all the energy it has to break the trend and getting to it, right? Like we've fallen, what is this, a 61 of that last move there? Just below it? So I'm like wondering about that as well. Like this last short term, yeah, we're testing the 61 from the underside because it knows it's leapt past its means and it feels the need to pay for that, so it's coming back to the 61 from the underside. I see that as a normal thing. You know, it has to pay the price for not holding the level that's obviously meant to hold, and everything gets bought back up to it instantly. It's like, wait a second, that was supposed to hold. But personally, we're about to get the change of the hour. We can see that centralization for the end of that hour is pretty normal. I mean, just being in that, maybe at the high of the node for that would look like the 50 of this move, right at that old gold dash line maybe. We'll see. We're running out of volume here, so a little bit of pushback is normal, but turning this level into a support undeniably is what we're doing in the event that we conquer this red-yellow line and get through it. This level will be at last used as a support, not resistance, interestingly enough, which is kind of finalizing that idea, and I'm like, I don't mind that, because in the event that we carried on, we would have B points that would be untested. Now, we don't. I'm like, what about a 61 to a 61 to a 61? Again, I'm like, is it appropriate here? I'm like, I kind of think it is appropriate, ironically. 61 to a 61 to a 61. We could get 3 of them, maybe 4. And what does it look like when it does that? Well, if it decreases in size by the same amount until it can't decrease anymore, what does it look like? Well, a triangle. If it decreases by the same amount every single time until it's done, leaving the same amount, it makes a triangle. And at the end of the day, we love doing those. That's for sure. No shortage of triangles out there. That's for sure. Yeah, we're doing the thing. I mean, we're back at that gold dash line now. Don't split hairs with it. It's basically there right now. So we do have to understand that this is also the high of the node, and it's shortly. What about the spike in spring? Remember that? What's this? Is it that? Well, I think it's a little harder for it to do when it's not at the extreme. It's rivaling the break of a long-term downtrend. You know, what could the ignition candle look like on a trend that's over 100 days old? Could we get right through this range and go right up to that gold bar above? You know, because if we remember from earlier in the day, I got arrows pointing like crazy to this level. And, you know, the team that's getting us there means business. They have the capacity to herd the public to the most disadvantaged area so that they can become volume for their positions. And that's legal. But they can't push the market around. I say they just let them push the market around. People could piggyback on them a lot more, but they seem to make their money anyways. I don't know why we don't just let them do what they want. If we're gonna let them do this anyways, it's counterproductive. They should get tax benefits for creating patterns that the public is aware of. That's a joke, but you know, that'll never happen. Fantasy. Capitalism is against it though. Somebody has to be losing, it seems, for this to work. And it's not the institutions. But it's like, how many losers were required in getting it back to this gold dash line? I mean, and what was their purpose? Or are they just not around? That now the same orders that were essentially used by the institutions in the morning have that much more impact and that much less oppression because nobody's opposing their ability to move with such low volume. And lack of people willing to trade, they have full autonomy to move their positions that have otherwise been accumulated off the volume that was provided by the people in the morning. So I'm like, yeah, makes a lot of sense to me. And everybody else is just completely oblivious to it. I'm like, I don't know why. They're convinced though. Like enough people are listening to Kramer that it moves with this much precision. this much precision, and enough people are using the mutual fund managers that it's moving with this much precision. I'm like, okay, don't think so. But it's like just like the shepherd herds the sheep, there's a strategy to it. And it's like this: if you just place any ordinary guy like me and tell me to do that, I don't know what the guy says to the dog, or what I know, the dog's involved somehow, but I don't know exactly what the process is. You're supposed to use the hook. I don't know what the hook's for. I don't know what any of it's for. I would have to be taught. I'm certainly capable of learning, but I don't have the information. Completely ignorant as to how to herd the sheep. And at the end of the day, they have a strategy, just like the sheep herder does, of exactly managing to put the people where they should be so that it benefits. I don't want to say the economy more, but it just keeps the ball rolling, and it definitely benefits them more. Because how do they get all their money? From the public, not from themselves or something. Where do they get the money from? Public. So why is it not a problem for anyone in the public to consider the fact that somebody's out to get them? They just think it's other people in the public that aren't as knowledgeable as they are. But in my experience, there's direct parties that are trying to herd up the majority of the people so that they can, all fall for the same trap to benefit the institution and to and I'm like, well, that's the composite man theory. At the end of the day, the composite man theory was created by a guy that died in in the 1930s, and I'll put it up again for a second because I have to, because I'm explaining it in a different way. And this guy, Wyckoff, this guy said this: all the fluctuations in the market and all in the various stocks should be studied as if they were the result of one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your great disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. So it's interesting. So it means there's a way it's supposed to move, and if you don't understand it, then you're against it. And the market's always moving the way that it should move, or else I wouldn't understand so much of it. It's like one thing to the next. It's not like there's bridges of non-understanding. There's areas that I'm not attracted to because it doesn't offer as much as previous areas that I do understand. But I don't like the amount that it's willing to give and the speed that it gives them. Sometimes it offers less and takes it back quick. I mean, who wants that? I don't want a little bit that's gone in 2 seconds. Nothing. So being able to calculate the long-term moves and get into them on short-term entries and be able to manage them with a short-term mindset is really key in a pool where you've got long-term traders or short-term traders. Thing to me, you got to be both. Yet there's such an opposition between the two parties that everybody loves being specialists so much that they can't see through their own specialization. They can't see past it. And I'm like, I don't know, I don't have enough energy for that. Just like they put up such a big wall. I'm like, it's easier to have an open mind. I don't want to defend anything. I'll just bring proof to the table. Like there's no opinion whatsoever. But it's a collective amount. The collective, like the variables are all a collection of facts that are used to be able to create an understanding of the market environment. And understanding gives you that ability to see where you can fit in with the moves that you do understand. And it's like the more that you understand, the more you find yourself doing things. And the more that you're there, the more that you have the ability to understand things. And the more that you analyze, the more that you will remember. And like I said, the market could move twice as hard and in half as amount of time, and I would prefer that. Maybe in the future. Maybe in the future. Twice as hard in half the amount of time. So it means that As soon as anybody gets in, if they're not right, the stops, in order to be able to justify being exposed to some of the candles, will have to be so large that many people won't even try their hand because you will have to be right. And that's what I'm waiting for, is that environment. And it will come. And it will be very lucrative. For those that know how the game is played. But the things that I have had to say today are actually very important, I think. I think today it's worth watching the video again. I didn't start the recording at the beginning of the day either because it was kind of slow, and I posted a lot in the chat too. There's a lot of philosophy today that I live by, and every single day, and it came out in a good way today. Ask me to say it again, it might come out in a different way, so which I will do tomorrow. As I say, I'll explain it in a different way every day because it's relevant every day and it's relevant to a new situation, and I find the need to explain it because it's relevant. I'm like, well, God forbid you don't understand this thing because this is the most relevant thing that I find. I'm like, well, let's go over it. Takes 5 minutes, at the end of the day. Not even. Is it ever showing us how much it's used this as support? I'm like, well, last time it showed us this pattern, it went down miserably. I'll show you. But does it have to do that now? No, 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 no. Doesn't. At the end of the day, this movement right here I find remarkably similar to... Oh, terrible tracing. That. Remarkably similar to what we're doing now in many different ways. No? Or am I crazy? I think it's pretty freaking similar. At the end of the day, I don't think it's going to do the same thing though. Doubling down? No. Sideways? Sideways, look at the time. We have sideways. Do we have enough time to do this? Is this the same? Oh my goodness. It's the same thing. Literally. Everything is the same here. But it goes up potentially. Up or sideways? One of the two. Probably I'm 60-40 on sideways, to be honest. And any downwards movement that we get through that yellow line is just a readjustment, which could be very necessary, as a matter of fact. Actually readjusting that yellow line could mean that it's not going to be a problem for the break of the red yellow line. Because if we don't break that yellow line, that means that as soon as we do break it, everybody will be looking at that line to break it. And I mean, if we make it a crappy line that's hard to get to, people will be that much less interested in it. And I'm all for that. I'm cool with that. We'll do that. The worst place to be positioned from any triangle is from the tip, though, ironically, because every triangle has had a better spot to be in from than the tip. That's another way to explain it, and I'll stick by it, So it doesn't mean it doesn't ever leave from the tip, it just means that you could have been positioned better than what you chose to be positioned from. And it's like the question becomes, why was it good enough for you, right? And it's like, could we improve? Well, undeniably there was a better spot to have traded, so why didn't we find value in that spot becomes the next question. And I'm like, well, I mean, don't be too hard on yourself. But these are questions I would expect would be, if you're at the best firm, you will have to answer these questions 100%. I would think 100%. They wouldn't be very good if they didn't have that understanding. So, and it's like, that's fine. But I think it's good though. You know, when you've done things that make you feel otherwise excited about the progress that you've done, it's good to replace that with being serious, because you understand how being heavily excited or heavily depressed can make you illogical. At least it's just humanly possible. So I try not to test it. And you keep your mind on the strategic method at all given times, then it's a lot easier. And it's like if you always find something clear in the market, it gives you something to focus on while you're either waiting for it to finish, like this triangle, or yeah. Triangle subject to ending soon. It does give me deja vu to the triangle on the top with a consolidation and a triangle on the bottom. However, I find us very likely to be closer to the next failure of that rather than the ability for it to actually produce itself correctly. I noticed it on the last one, the triangles weren't even. So that's a telltale sign right there. We're already seeing differences. The last time we did that, the triangle on the top was bigger than the one on the bottom. You're like, where'd that come from? We don't do that. Why the change? Are things changing that much? That's interesting. Something must have changed in order to be able to bring that, you know, in over the other thing that was working so well. That's basically the idea. We're testing the yellow line, retesting. Mentioned the need to readjust that line. That wasn't even the readjustment I was looking for. It would be another readjustment, potentially. We have to watch out for. Doesn't mean give up any long trades, but basically the situation is the same as a moment ago. The trend readjusted a little bit, but I still find this one important. Almost like it's the extreme to a symmetrical triangle. Like it just had its first fake out. Like on the other side of the triangle, we have a line that's very similar to the one that we have here, making it very even. We can see that it led to the downtrend break, and we've moved out of the upside more than we did the downside. So far, returning back to the triangle is normal, so no stop should be dragged in this path of being able to do so. Kind of reminds me of the approach that we had on this one. You know, the kind of like grind that we had, and then it pushed up to the barrier that we otherwise is the most controversial barrier. Then we push up to this one and have the same kind of pullback where effectively everything that we did in this consolidation had a breakout at the moment that it was expected to break out. This is the brink of a breakout, like I said. And effectively it broke out and hit the trend in question, came all the way back down to the brink that it broke out from, and retraced the entire exciting drastic push bit. You had to already be exposed from there or lower to be exposed to this without being overlapped again. And then ironically, as soon as we came right back up, it was exactly to the yellow line that it went, and not a single flag further really. It was recognized as a level that otherwise kept us into this consolidation for a prolonged period of time. This triangle, in fact, is not actually a triangle whatsoever. I didn't intend for it to be here and triangulate. Ironically, it is triangulating there. But my intention was for it to take the triangle that it had before, which was the larger, bigger picture triangle, and double it, but not down. Like every other triangle today was doubling down, down, down. And then this one was expected to double up, and that's what it did. And that's why I left it where it was originally. Because it was supposed to come up off of what was the 61. I remember placing it on top of the 61. Like a very abstract method of analysis, but this is exactly, and it's like, good luck getting a computer to do that, you know what I mean? So it's like putting a triangle that was created at a different spot on top of a 61 and placing it so that the peak was at the triangle, and then expecting that's the distance that it's supposed to run, and also placing the fib channels perfectly so that at the pinnacle of reversal, the exact time that the institutions wanted it to reverse, or not reverse, but break out on command, it did that. And it went straight to the trend line. That's the one that stands out. My red yellow lines, look at how they work. This one had how many negative responses before it broke? Did it break though? That's the point. At the end of the day, it breaks. It changes things when it does break, and typically it doubles things. Like it takes everything that we've been doing, doubling it. It takes everything that we've been doing and doubling it at the minimum. And I question this now because breaking through that green zone is the doubling point of this area down below. We conquered it. It's support now. I mean, it's going to be hard to get back to it now. That's the interesting part. So what about this? Oh yeah, no. Yeah. Here, we came to 61. A smaller version. I mean, what did we do here? We came to the 61. We did this like ridiculous downwards consolidation that was difficult to be exposed to. Check mark. Difficult consolidation that was difficult to be exposed to. Check mark. Red yellow line ended everything. Check mark. When it ended, it doubled. Another check mark. When it doubled, what did it do? 61% retracement. To start the next consolidation, oh my goodness, is it doing it again? What are the odds that this consolidation is the same as this one and this one, and that this line's actually red-yellow? Imagine that. Because in the sequence, it actually is the same as everybody else's trends that they've had. Here, the red-yellow line makes the downtrend. The red-yellow line makes the downtrend. Makes the downtrend. Yeah, they all lead to advancements, though. You know, like every single one of them. Advancements, yet they're not the high. You know, this one failed to get all the way to the high. Now when we break the red yellow line, we could run into that level to come back to retest it. And, you know, the breakout of the red yellow line could be fueled by the red zone breakout. Because, like, what did the green zone do? What did the gold zone do? The gold zone is like the green zone, is like the red zone. There's more zones, but we'll get to those. There's a gray zone. What about that? I haven't even drawn that one in yet, but there. I mean, it's only the choppy tough bit that's led to the best moves every time. This one, it's not even good at going down. Like, I mean, it's not going down for many people. Who's it making it tough for? They're all gone at the end of the day. The imbalance scares people, so as it should. It's a pretty much a move that's like a reconciliation of shares at the end of the day. And you know, the data that's provided on that can easily be manipulated. Only those that have access to professional data should really even be interested in that. And I mean, like, that's 1 minute of the day. I mean, God forbid that was the only minute that you understood. That would be dangerous. Right? No, you can't be doing that. Some people do that though, but I don't do that. Not gonna lie, every time it does happen though, I am looking at the imbalance, but I don't really consider what they have to say about it. I consider the environment and how the increase in volatility can impact the current situation. And like, this here, triangle with a spike, when we did it this time, it was like a head and shoulders, but we did this, and that effectively only got us to here. What? And like, 2 or 3 more moves later, still 61's the hold. Now, what's funny is from the very bottom, it pulled back to the 61 here, and it could barely make it through it. And I mean, we had that same thing here. What happens when we make it through a 61? I mean, this is over. Well, because clearly within this trend, there has been a pattern of it getting back to the 61. And for the 61 to actually work. Oh, and a mega consolidation. Like that just ultimately seems like a big waste of time by the end of it all, but it is what it's chosen to do at these levels. Mega consolidation at every 61. And to not really care about the 61s to the upside until now. That's funny because the 61 to the upside was considered here. And I mentioned doing a 61 to a 61 to a 61. I think we did that, actually in here. I didn't really keep track of it because I'm not interested in playing those moves right now. But it did do, let's take a look. Well, first of all, it came down to this 61 right here. We can see that. That's fine. And then it came up to this 61. We can see that, right? And then it came down to this 61. We can see that, right? Then when it came back up again, did it go to the 61? Was that 4 times in a row that it decided to do a 61% retracement? Oh my goodness. That's a 61. Let's take a look. 61 right there. And then it ended. Multiple 61s back to back. I mean, if you were interested in that movement, it didn't do anything else while it was doing that. It did all the 61s that it should do before it did the next thing. And that's cool. Not that I was really interested in that, but one day that'll be the hourly. And I mean, if you understand it as clearly as that, I mean, that's beautiful. One clarity to the next. But is it like, when have we done that today? 61 to 61 to 61. Where did I pull that from? Why did it suddenly tell me that it had the need to do that? Well, because I understand the components of the sentence. Each move is related to the need to be able to do that because I understand what it's trying to say. I understand where it's coming from. That's the idea. I know it very well. So that's the idea. Develop a relationship with the security that you're trading. You understand it. You understand why it needs what its necessities are, what its like how it returns to the mean, what it does on trend breaks, how that can be tough, what the difficulties are, what the successes look like, what the targets look like, what the endpoints of the trends look like, what the middle bits look like, how long the consolidations take, what size are they, what they mean, all these different things. Because today every consolidation that was a triangle meant double down, double down, double down. Everything doubled down, and it was the same triangle over and over again until it was like, hold on, we're done. We don't do that anymore. We go up now, and we did do this triangle, and I'm just as honestly like it's great that it did what I wanted it to do, but I would never have it do this. So it's conquering the blue zone. Necessary to the people that are looking at the way the volume is distributed, sure. But I think they're very good at distributing the volume, and I can see it's not the name of the game. They get that done the right way every time, the way that I see it. It's not something that it's something that can be manipulated. The volume, yeah. With the dark pools and such, you never know with the volume what they're deciding to show you, or how CFDs are traded. What if somebody's dropping like trillions of dollars on CFDs? The contract between the broker, you'll never know. And what do you think? If an individual can do that, what do you think the institutions can do? So I'm just a little skeptical on volume as it's presented. But I like to look at where the retail volume is, because undeniably this is where the people have traded, and the institutions will have added volume to the people's market where they see fit to make it seem like it's meant to seem. By the way, we're getting to the red zone here. By the way, is it not true that we didn't break out to it? We didn't break out to it. Like, it was prevented by every single which way possible. Now we're coming back to it at a lower point than what we were at, and we met it from a consolidation. Like, what's that? Not very good. But what if we take this triangle and do this? But what if we did that to the size of this triangle? Like, I can't remember how to say this, but basically this triangle had a move that was this big. What if this triangle has the same move and its size could be quite large? Because after all, it is a relatively new triangle. I mean, when have we done this triangle other than the place that I got it from? Because that was the triangle because it started here and ended here. You can see it retested, and then when it was finished the retest, it came back and did a retest from the other side. The tip, it got some attention there. Pretty equal on both sides. You could see that attempt at equality. And this is like, what a terrible trend break. Like let me take this one out for a second. Take a look at this one. Absolutely terrible. Like, it shows us how trends can break properly. Like, this was a good trend break. Like right here. When it finally made that like whoops, fourth and fifth wave kind of thing here. Like, it broke it clean. And it never came back to retest. Look at what it had to do because of that. It came literally back to the point where it broke. What's funny about that is it's like, oh, you didn't find value before the trend broke? Well, everyone gets taken out. The wicks and spikes that have no volume remain because nobody was there. So why'd they have to come back for them? Same thing goes for the lows. This is where, the majority of the people started to taper off, and that was the best place to trade. And then it comes back to all of them in the big chunk where they all decided to trade early. But patience for those at the end of the day, like, it was roughly what, 11:43 when it started to change out of the environment. I want to point out that it is true that this move pulled back to the 61, and it chopped on top of the 61, and it literally went again, third time in a row that we've done component number 1, the chop down, and it was to a 61. It was to a 61, and then it broke the trend, having not broken the 61, and it rallied up. We're almost through the top. At what point have we ever come through the high of the previous pattern? Where did this come from if we make it through the top? That would be something, wouldn't it? Things must have changed. The audacity to break the the downtrend so high. Many people likely not to be associated with it. The institution calls the shots. Whoever's controlling it right now, which I believe is it's being done well. Like, they will be able to provide a report at the end of the day showing a reason for every single one of the moves that they were part of. Because it was intentional before, and it was because it offered the results that otherwise were captured. Like I say, sometimes you can see the report, or sorry, not the report, the result early on in the day, and the difficulty can be great for the people of the morning that are trying to persist with that target. The name of the game for the people of today that are causing this movement, not to just get it to that level, but it's to keep holding all of that and all of this and all of that and everything that they could milk out of everyone to become a seller. Because the public that tried to buy, they were turned into sellers before it ran. And you could see, no volume, run. Came back to everywhere that there was volume, which was where there was people. So it makes sure it eliminates most of them before it moves. In other words, now that it's so high, not many people are trying to go long, so it doesn't have to pull back as much. We're in the business of going up and sideways. Contrary to popular belief, many people will try and short it only to get stopped out. Hedging is dangerous. This is where they're trying to seize the day here. Because they're going to do something that ends the day's characteristics. The biggest part of the downwards moves that have been associated with today have never been able to cross this high. The big downwards move that has the retracement that offers the 61, under no circumstances has the last high ever crossed. Flame with fire. Flame with fire. That's all I can say. Because what it is right now is the same as this one. You see how they're the same level? These are. 61 comes the next question. That's only what it has ever done. Now what about the event that we make a new high having not made a 61? That would be interesting. Let's do that instead. Because people will be waiting for that 61 because they think it's easy now. Now in retrospect, you can look back and find that it's reversed off of the 61s. That would be too easy if they gave it to everyone now. No way they do. They take it, they expect people to short it down to the 61. They want their stops. They want it. They want that gray zone. They want this to be a support that they can sit on comfortably throughout the evening knowing that they conquered the day and that they win. It's extraordinary. The impact is profound. Everyone stopped out. Now we get a little bit more people to short it. It's like, hey, just get your position back. And don't worry about that. We just stopped you out, but it's okay. And they're like, well, go for them again. Harder this time. Like, but more people are shorting, but more people are shorting. Well, let them short it. We're going to get them all. That's the deal. There we are. And it's like we get more people to short it. That means there's more buy orders in the gray zone above. We don't want to have to buy there. They're paying for it. The whole thing. That's the way it goes. And they have complete control of the imbalance as well. They don't even worry about it. They're still playing the game against the people, 100%. Or else it wouldn't be doing the things that it should be doing. It would be contracted into a little center point area that keeps everyone maintained. But no, they know they have full control, and they're going to take every bit of advantage of it. Anybody that fights against them is going to get destroyed, from what I can see. And it's a slow burn. And it's the right kind of burn. It's the one that counts at the top, right at the best spot that nobody wants to be caught buying. Got to get them to pay for it. That's what we're doing. Squeezing them. Slow burn, squeeze. Like, very slow, very brutal. A lot of people are getting destroyed right now. And it's being very unforgiving. But forgiving, it's like, if you're part of this destruction, it's just like absolute glory. It's glorious. That's what it is. Because it's contrary to popular belief, and you're on the team of few that have conquered the most. That's the idea. Because most people have no idea why it's doing what it's doing. They're victim to it, and that's the idea. Because it's absolutely clear, every single candle, to the matter of the fact that since the moment that we broke out of that green bar, like, they took absolute control. When I say they have complete control, it's not absolute control. This is absolute control. And I don't know why anybody would want to take a gamble on any other kind of investment when it's this clear. When it's this clear that this is the way it does work. Every single minute is clear. Every single long-term move is clear. Every single destination is hit. And that's the deal. And one day it will be noticed. Hopefully I'm not dead. At the end of the day, we're approaching the levels that otherwise aren't even close to the target. Remember at the beginning of the day, I talked about this line. Breaking this level gets us there. So this is nothing. This is just making people pay for the spot that, there's obstruction until we get through this level. Once we get through this level, we seize everything. Everything is completely bought out. We own everything. That's the deal. That's what they're doing right now. Every single part of this move. They own every single thing. Everybody's been bought out at this point. If you're a seller, you're at a loss. That's the truth of it. So it's not the right position to be in. The right position to be in is on this team, understanding exactly what's going on, understanding exactly what's happening. This is the imbalance. This is how they own it. Watch that blue and yellow line. Danger. Okay? This whole area. So we're doing imbalance. So basically coming back to do a retest of the red yellow line could be on the table. We have to watch out. Hedges for the imbalance are something to consider. This level, no stops will be dragged above it. Hedge target levels, so you can put an order to take profit at that level. Trimming some here would consider the B point still though, and it can be hit multiple times. And the whole idea though as well is that we do get on top of the gray. So whatever downwards movement there is merely to be hedged, not shorted as well. Like not just simply short. It's risky. At the end of the day, you can see who's long and how much power they have and what they're willing to do to everybody that stands in their way. It's either you're with them or you're against them. They are the composite man. They are the composite man. These people. Maybe it is just everybody understanding, the market this accurately and moving it this much at the end of the day. And it's like the other half of the world just isn't. And I'm like, I don't know. I don't think so though. It's definitely the intention of somebody, and it's not some deity like the composite man. It's likely to be the people that make all of the money on Wall Street. And I'll be damned if they don't see this. That blue and yellow line could offer a nice hedge. It only ever has in the past. That's what it's good for. Imbalance coming in less than 30 seconds. We gotta watch out for this heavy duty time of day. Today is a day where I wouldn't change a thing if I had to do it again. I'm very proud of it. Being in line with the market for a consistent, prolonged period of time where it's like, the entirety of the day, there's no worry at all because you understand the next thing when we're finished this thing. The need to do the next thing is that much more apparent because you understood the last thing. And it's like all in the name of getting to the target, which is here, obviously. Yeah. Those are those ones you gotta watch out for, the big ones. And that was clear at the beginning of the day. I said that at the open that we were gonna get there. Let's take a look. So the entire value of being exposed to today first post of the day. Interested in the 61 above, the gold zone. Any hedges should be profitable still. If you're holding, you can trim them. Stops can be threatened on the move to the yellow line above. And that was like having not even hit that gray zone yet. We were still in the gold. It they lost a little bit of steam there, which is fine. I love that though. They're absolute monsters. They just take complete control, and it's beautiful. Every single second of it. And they know how to work the candles too, which I have a lot of respect for. They're not just long-term holders because they're a fund. They have active interest in every single micromanagement movement, everything. And I love that. That's I got a lot of respect for that. I'll do it the same way one day. I got a team of my own. And I won't sleep. Only when I have to. But constant living, breathing, every single moment, managing the assets. That's it. Managing the hedges, managing everything. That's it. It's the name of the game. Or else you give up control. Not good. We just knocked on the door again. Anybody that traded back to the B point, if you put an order there to take profit, it's filled. And it's like, why didn't I put any on these ones as we were coming? Just this one. This was the one that was recognized as well by the people that moved the market. Or else we would have given more recognition to the other ones, but we didn't. It's interesting. Because this was their way of moving the market. And they do it a very particular way. There's only one right way at every moment in that area, and I understand that. They do it very particularly. Beautiful. And it's after it's been too tough for anybody to continue. So it's another thing to feel good about, where you stood through where nobody else could. Nobody had the integrity to maintain through what was good for them. Because it was good to maintain through every one of those pullbacks. And every single pullback you did maintain through, it became even easier and more profitable to continue holding through all of them. What's going to happen to the people that have went through this difficulty today to be in line with the people that have managed to endure every one of these pullbacks and break every single one of the daily downtrends? What could be in store? Because not many people can be positioned in the short term with, highly leveraged derivatives to benefit off of such a move. Typically, many strategies, you can even see they don't have the volume in there. A lot of people were sellers. Look at how many, look at how many sellers are at the top here. Like nobody. So they were all buying, which is like making me like a little sick on the inside. Well, in fact, they weren't doing anything, but what they were doing more of was buying. And the day ends not quite at the top, which is fine, but we'll see this level again, and we will see it from the other side. Everything we're doing now, okay, imagine this, okay? This is something that I find very interesting. Everything we do off of this now, I don't care how far down it goes. If this is all it does, that's fine. Anything we do off of it, we do on top of it. I don't care if it's this move right here, guess what? It's happening on top. If it's this move right here, guess what? It's going to happen on top. 100%. So I do understand that at least. And it's very likely that we make these moves on top of it as well. So whatever moves we do now are likely to be contained within these ones. So don't be surprised.
That's the same gray zone that we were dealing with yesterday, right?
It is. It is. It was actually
Yeah.
created yesterday, and it was the medium point of yesterday. And everything that we
Okay.
did on top of it, we did below it as well. It was very good about that. Like it
Yeah.
made
Yeah.
it a spike. I like that. Of course, any hedges are about to be threatened, so it's of course any targets that were made on the B point, you got to make sure, like at no circumstances is anybody allowed to lose on a short trade that's been profitable. It's unacceptable. You know what I mean? Because you got all the time in the world. Even when I'm saying it now, if it's coming back and you're moving your stop up, you're doing it wrong, right? So make sure you don't get greedy. Don't look at the profit and loss, and you won't know what you're missing. At the end of the day, you know it's a profitable trade. If you get stopped out on it, that's as far as it goes. You're too busy focused on the next one, not the last one. That's the idea. If I was to say, like, that's what that's what I needed, to hear, like when I was freaking out the most, like straight up, because I wasted so much time, trying to figure it out until it was like, oh man, this is just clear. You can't go against this mentality of, the difficulty comes before the ease, and it's just the way it likes to be right now, and it'll change. Not like we're ever going to have a pinnacle reversal again. We're definitely going to have a reversal that stands on a dime, and these ones are better in my opinion. They take more integrity. It's not only patience and discipline, but you have to have the accuracy on the short term to even be able to be in from the bottom, and you have to have the guts to buy into the trend while it's at the extreme, not wait for confirmation. Because if you did that, you were overlapped and made into a loser. The market otherwise didn't respect that positioning, and I don't like to be overlapped and made into a loser. So I get the best price and keep it. So at the end of the day, that's the one thing I've recognized. There's no better way to do it than that way. And I'm like, well, I don't settle for anything less, because the next thing that's better will always be better than the rest of the current thing. The entirety of the next thing will always be better than the rest of the current thing. I don't get the peanuts of somebody else's trade. You want the whole thing because you're there from the start, because you knew it was going to happen, because you intended for it to happen, because that's the right way it should move. And it's not your opinion because you dare go against it, because you know that's the one way the market will be moving at that time, and it's not your opinion, it's math. So that's the way that I look at it in a nutshell. And everybody else is worried because they actually think that their opinion matters. And I'm like, no, 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 no. If you go against the math, you will lose money. And it's like, it's tragic that people think that they can have their own flair on it at any given time. Well, at what time in that trend, while everyone was getting annihilated, could you have your own flair if you weren't part of the moves as they were presented? There was one way to do those moves, and while it was doing them, those were the right moves. You're either with it or against it. And as far as I can see, every single move that it made was to a T. Everyone getting stopped out as they should. Every advancement, egging on people like, hey, you're missing the trade. And then they just rail everyone until they got no more volume left. Nobody's trying it anymore because they beat everyone out. Look at the short term here where the people started shorting it. And then they got beaten out, beaten out, beaten out. Look at who's trying up here. Nobody. Because they ain't got no money left. That's the interesting part. So it's either we can become them or learn from that lesson and be like, okay, we don't need to be those people to learn that, right? Like it's so dangerous. We don't need to jump into the fire to understand it's hot, right? So like that's the saying I would say right there, you know, for that. Don't gotta jump into the fire to understand that it's hot. Especially if you can witness somebody else in the fire. It's terrible, but still, you know, it's true. And all the more to recognize the danger of if you can see somebody else going through it, you know, and it makes it all that much clearer what's going to happen to you. This is my point. Which I mean, it's tragic for the other party, of course, but you know, we don't have to be that party. And I mean, the door's open here. I'm trying to help them, but they're not here, so I can't do anything for them. And they all get railed out in the name of the long position that has the target that's above the gray zone. End of the day. Eye of the day. Interesting. Well, pretty much. At the end of the day, hopefully you guys had a wonderful day. It was a very clear day, a lovely day. Can't wait for tomorrow. I'll be monitoring throughout the night. We'll be watching for that gold zone. It would be interesting if it popped at it through the night and that was the high. Imagine that, eh? Imagine we did this throughout the night, opened here. Oh yeah, everybody couldn't catch the high, I guess. 2:30 in the morning it happens. Well, if that happens, it could be an interesting Friday. I'll be monitoring throughout the night though, and I'll keep you guys posted. But hope you guys had a wonderful day. Catch you later.
Sounds good, John.
Yeah,
Appreciate it.
yeah, have a good one.
See you later, guys.
Take it easy. Have a good one. Take it easy.